recording season. This is Danai Hall at H on Twitter.
And I'm Randy Rowe, Randy in real life, RTO on Twitter.
Yes.
And we are back. We're back with another week of finance goodness. Wow. I said that and it sounded corny to me.
No, it sounded like you didn't believe what you were saying. Is that
Yeah.
You might have to do with that long market review we're doing right now.
Yes, it might have something to do with that, guys. We're going to continue it. We are continuing it, but not quite in the way that we have been doing it in the past. Not that we're going to stop, but I don't have a pretty way to put it. It can get pretty boring. You look at a lot of stocks all the time, just naturally when you do what Dana and I do, in terms of being serious about investing. And then we talk about it normally. And then, of course, that's pretty much all that most people that talk to me about.
Yeah.
And that's what they see on Twitter. So for you guys, it might be the very first time hearing us talk about PTL or Proven or GK or whatever, but to us it's like maybe the 80th time for that day. Not that matters to you guys, not that matters or should be bad for you guys, but it does mean that we don't want to be dreary with this. So we are, as we've done before, breaking up those episodes with other things. And this episode, I hope, is one of those fun broken up episodes. We'll have a guest who you'll hear a little bit later. And we are just going to talk about stuff that's happening in the market because we also don't want to lose that current feel. And a lot of things have happened.
Indeed.
Since the last time we spoke.
Yes, quite a bit.
Yeah, I'll start with one that I think one of the hot ones for this week is last week's episode where I made that little wish to the universe about Mailpack and their at the time impending dividend.
Yep.
Yeah, people, would you believe when you know what happens behind the scenes here, it is a weird set of conversations. Yeah. We don't get excited about the things you think we would, and we don't worry about the things you would. The things we worry about are things you wouldn't believe, and the things you think we celebrate usually aren't. So I'll be lazy and just say that I'll insert in the clip right here. I'll be surprised it's more than 1 cent, which would be 1%. 1% as at IPO price.
Yeah. Yeah. You know that standard 1 cent dividend, 1% dividend.
I really hope I'm wrong. I hope them blow us out of the water like a 4% dividend. So you guys who are listening just heard the clip where we said that, they have a nice dividend coming. They have a nice possibility. Then I said, maybe not. Yada, yada. You just heard it. Point is, it ends with me going, I hope they give us a nice dividend. I hope they give us something like, for a nice 4%. And so said, so done. They gave exactly 4% Mailpack. And that was 4% at, I don't remember if the price was higher. But sorry, it was 4% based on
IPO price.
IPO price, correct.
So it was 4 cents.
Exactly.
Dividend of 4 cents.
And how long have they been listed? They've listed December last year, like mid-December last year, 2019. So we are a little...
It's actually a really good dividend, especially in that short period of time.
6 months in, a 4% dividend and cap gains of... I don't know, cap gains of
100 and something percent.
How much percent?
I said 100 and something. I'm assuming it's above $2.
It closed today at the day we're recording this. We're recording this on the 7th of July. It closed today at $1.91. So
so it's 91%
cap
profit.
gains. Yeah, cap gains of 91%. 91% profit in 6 months plus 4% dividend on top of that if you have stayed in since IPO. Yeah, this market is not a normal market, and this is while the market is going through a dip.
Yep.
Yeah. It's a really blessed time to be alive in this market. I don't know what much else I can say other than, I'm really happy it happened. Why I mentioned earlier that the conversations and the things we're excited about or worry about is actually, I am not the one who put together the ads for that episode, and some of you might have seen the ads on social media, the video of it. And so I saw the video at the same time everybody else saw the video.
Yeah.
And I was so surprised because I didn't even remember that I'd said that on the podcast. I thought, it was take note. And not because it's not great or not a good guess. I think it's a great guess. It's not
It's not
that
really
big a
like,
deal.
yeah.
Once it's not really that big a deal, but based on the messages I've gotten and the things I've heard and the conversations I've had, it it immediately get me worrying because people are immediately going to start going, oh, I know something. I worry about people thinking that so much, probably unnecessarily.
Mm-hmm.
But no, I know the same thing everybody else know. I saw the financials we made, I guess. And we're not the only one. I think we should big up 876 Invest,
Mm-hmm.
who I want to get their Insta handle right. I mean, big them up. We've had them on the podcast before. We'll have them again. But they, on their Instagram, I saw, I think, a story where one of the members, I think it's Sean. I'm not sure if it's Sean. I think it's Sean and somebody else. Going from memory here, but they were pretty much having a conversation where they worked out what they thought the dividend could be and whether or not it could be big. And I like that they came at it also from a nice
Mm-hmm.
logical direction and hit it on the nose. I don't know if they hit on the nose at 4% also, but I remember seeing definitely above 2%, which they're again right.
Mm-hmm.
Yeah, I mean, big them up consistently. They continue to impress. What else happened, Danai?
What else happened? All right, so on the topic of dividends, you have Indies.
Yes. Indies, the big, yo, people, 4% might have been a good dividend, right? 4% is a
on
big
IPO
dividend.
price.
Yeah, on IPO price. Indies.
Giving
Ooh.
4% on current prices. This is
that huge thing there. Indies, 14-cent
14
dividend.
cents. Yeah, dividend 14 cents.
And it is I don't want to get it wrong. When they declared it, so there was a little bit of a mix up with the declaration of it, right?
Definitely, yeah. That was the issue. There was a mix up in the declaration. So it was declared on Friday, the 3rd.
Mm-hmm. Mm-hmm.
And the
as
declaration,
having a dividend of 0.14 cents.
Well, there are a dollar sign on it.
Yes. Yeah,
so
the actual wording was...
it said thing there. The wording was...
I have it in front of me. Indies Pharma Jamaica Limited has advised that their board of directors on June 25th, 2020 passed a resolution for an interim dividend of 0.14 cents per stock unit to be paid on July 30th, 2020 to stockholders on record at the close of business on July 14th. Ex-dividend date is July 13th. So this was the original wording of the notice on July 3rd, right? And on July 3rd, their price, I mean, they closed the day at $2.33.
Yeah.
Which gives us a yield at that price. It would give us a yield of, even then, that's still impressive, you know. No, apologies, I'm making the same mistake. Which gives us a yield based on JC's original notice of 0.06%.
Yeah, just small, to be honest.
Yeah, which is what we'd expect from a regular dividend, right?
Yeah.
In fact, I think in the past, their dividend has been around that level too.
No, I know. So the previous dividend was 8 cents.
Really?
Yeah.
Oh yeah, but yes, they did have a strong dividend. Yeah, after they had paid off the loan, they had a strong dividend.
This is a jump.
Yeah, exactly. So JC had this, and then I think what happened is that people knew about the 14.
People were clearing it out. All right, so the first notice had. Let me grab up my thing. I have something.
Oh, you have a screenshot of it.
Not good enough screenshots.
Of it.
I have things. I was speaking about it.
Okay. Yeah, on Twitter, where Dan
has. I was not speaking about on Twitter.
Dan has no voice on stocks, him though. He has learned how terrible that fire can be. But I do remember, I think, seeing, I know Philberg Invest mentioned it. I saw him tweeting about it. And he had a screenshot actually of both of those of the notice on both dates.
The thing is, the notice was changed twice. So the very first notice looked very different, and then the 0.14 came after. So it's the issue there. It changed twice.
So it originally said 14 cents.
No, yeah? So it said 0.14 cents, and it had a dollar sign on it. So you don't usually have a dollar sign if you're saying cents. So people. So the original query people were having was, is it 14 cents or 0.14 cents? So people were confused at that point. Then they changed it to 0.14 cents, no dollar sign. So that's when you have. So 0.14 cents is a clarification to me to say, oh, it's not 14 cents, right? So when that changed, it was it's not 14 cents anymore. It's 0.0014 cents. So $0.0014. So it looked pretty different at that point. But then we're getting clarification that it's actually 14 cents, which is huge.
Huge. Changes the yield immediately. So at the same $2.33, we change the yield to 6%.
6% yield. In America, we're used to 1% and 2% dividends. 3% is good with a 6% yield. Wow.
Yeah. In fact, last year, 2019, the largest dividend by overall, so main market and junior market, the largest dividend came from Scotia. If you work on average price, it came from Scotia in terms, I think it was 8%, 8 point something percent. Yes. 2019, Scotia's average price was $54.15, and the yield they had the yield was 8.7. Exactly, for the entire year.
Every dividend scraped together and then added together until the yield was 8.72. And in this
you'd have had to get your average price below 54.
Yep.
Which is important. So not everybody would have gotten that, right? And even then, that's 8.7%. You have to wait 4 quarters for an entire year.
And in this, in 1 quarter giving us this.
Exactly. That is a huge thing. Huge thing. And it's a huge thing to get wrong, because a lot of people have made investment decisions
based on that.
Yep, including me.
I know people. I remember, I did. I was looking when I first saw it, I said to myself, yo, they're not paying no 14 cents dividend. That's not 6% yield. So I just said, okay, never mind. I even got confirmation so people are getting secondary source. So some people were saying to me, oh, yo, I called Indies and they're saying it's 14 cents. I know a guy, and they spoke with somebody from Indies and it says 14 cents. And I just couldn't believe it, because the person I actually got, my official source, JSC, is saying it's not 14 cents. So I must believe this guy that called a guy and this guy tell him, say, and then so 2 people, not 2, 3 people got the confirmation. A man him call Indies and speak with somebody down there, a finance manager or something, and he said 14 cents. So you get me? I get confirmation of that sort 3 different times for the day, and I said, nah, JSC said this, why would I fight JSC, And then they change.
And the change isn't bad. People are human. Anybody can do it. My issue with the change is that they didn't, and they if you look at it, they didn't even change the notice. They put out a second notice. Yeah, they just went in and edited the original notice. There's nothing there even to say that this was edited. The current notice was edited.
Look on the time. If this is 3:27 p.m. on Friday, they backdated that change. That's crazy to me.
Yeah. What I did is I just went in and edit the code. I mean, it's a WordPress website, so I mean that they can edit the actual words without changing.
Yep.
Yeah, it's just a posting date. So edited, and it was edited more than once. So now it says that an interim dividend of 14 cents to be paid out on July 30th. Still a huge dividend. Still a big deal.
Huge. At $3, that's a dividend yield of 4.6%. That's still crazy. That's still huge. That's more than double what we get in the market usually
Wow.
for dividend yield.
Yeah.
Cause 1%. That's heavy.
Yeah.
At
At
$6, you get a two. I was exactly that. That's exactly what I did. $6. It will take you to $6 to give you a regular yield in the market.
A regular 1 year yield, and it's not necessarily a regular yield either. That kind of yield is well, it wouldn't have made the top 10 last year, but it would have fallen right below. The lowest on my top 10 last year was Epley, with the average price of $13.47 and a 3.5% yield.
Yeah.
But at 2% at $6, and the price is currently, as at the day we're speaking about this, it is currently
almost
$2.92. Actually below $3. Wow. Wow. $2.92. Still a 4.8% yield.
Yep.
Wow. That's a big deal. That's a big deal. Wow. Luckily we know now. So the two big dividends are there. And nowadays, especially because the finance guys are prohibited from having dividends, anybody who is paying out a big dividend like this is definitely going to attract some attention, I think. And we see the same. We see that with huge volumes crossing the floor for indies over the past few days. In fact, from last week, June 19th, or I should say from the last 2 weeks, June 19th, there were 2 million.
But the thing there, they look at from June 11th or thereabout, June 11th, June 12th, when the financials are released. And then because they had a great profit. Remember, we spoke about that on our review.
We did.
They had some great profits, and so there's a good amount of activity around that time. It kind of died down since, and then the dividend does spike it right back up.
Yep. But you see a lot of volumes going in, and we've seen a lot of trades also. I know yesterday there were almost 100 trades on it. Today, 75 trades on it, and yeah, I think people are realizing it's happening and jumping, and it's big volumes. 2.5 million units yesterday. Close that amount. 2.4 yesterday. 2.4 today, and I think this will continue. I think as people realize and try and jump in, because this is really a big deal. I mean, literally, you can have $2 million, buy something, make 4% on it in 2 weeks. Even if you have the fees of, let's say you have fees, if you have a good broker, you have one of those lower fees, and your fees overall fee like maybe 1.5, maybe you lose 3%, 6% of a dividend, 3% of fees, you still have 3% you made off $1 million in 2 weeks after fees.
And all that ties in well with the recent news around Indies disclosure of a private placement bond, where they're developing at least 2 new drug applications for the U.S. Food and Drug Administration. So they're seeking approval, develop and get approval for at least 2 abbreviated new drug applications from the U.S. Food and Drug Administration. So, yeah, and they had acquired a property.
Yes.
Yeah.
Something for I think their expansion, 3 acres of land in Mobay.
Yeah.
Yeah, which they got a bond, a private placement of a bond, $1.12 billion from Sagicor.
They're doing quite a bit. So it's funny because I just spoke about them and called them the potential company where they have a lot going on. They have no debt on the balance sheet, and they have good cash, good profits, so they can they can take on more debt and move into business, or just use what they have now and expand. And here they are doing exactly that. So the potential is now being realized, and they're moving into newer heights. So congrats, Indies, heavy dividends, and more profit in the future.
Yeah, congrats to Indies, and congrats to all the people who have gotten in, and all the people I'm sure are going to want to get in. Yeah, if you're serious about dividends, if this is one of the few times where, if you care about dividends, this is something that you can actually get. And the fact that it's still below $3.
Yep. At this point.
It's
Tuesday. It announced on Friday, and it's Tuesday, and you can still get below $2. Oh gosh.
Yeah. I
Yeah,
mean, I know a lot of it might have been because of JC's
yeah.
bumbling of the
People were.
notice.
We know a good amount of people that were just wondering what's going on here. So
Mm-hmm.
too much ambiguity. So I guess because with new clarity now, people can made a decision knowing that hey, this is what it is.
Exactly. And I mean, I can be open and say that I have bought and I will continue to be buying.
Oh
I'm
yeah, man, I
definitely
bought some.
buying.
Yeah,
I mean, we're recording
and
this in the night, but
I see some more opportunity for buying.
yeah,
You look at the queue and see, boy, some more $3 are there, some less, some below $3. I can't see why not, to be honest. So
it's below $6, brother. I am into, and it's not like the company is not good. The company is
exactly,
strong.
yeah.
Yeah.
So
Below,
congrats also to Future Dana.
I can see myself buying it all the way up to maybe 5. I don't know if I'd go in at 6, but then I have, yeah, I probably wouldn't go in at 6. It also, of course, depends on your own timeline and your own
I mean,
goals.
if
And
I think
most
about it,
importantly,
if
we
you're
are
thinking about
not
it, if you buy it,
investment. Sorry, then I forgot. We're talking so
okay,
deeply about
yes,
buying something.
yes, continue, sir. Go
Yeah.
ahead.
Yeah. Guys, just in case you don't know, we are not investment advisors. I'm not a licensed investment advisor. Neither is Danai. Neither is any guest on the show unless they say they are. And even then, while they're on the show, they are not giving people investment advice. We're not in
Yeah.
the investment advisory business. All right. Anything you hear here, go and speak to a licensed investment advisor about it and whether or not you should buy it.
Yep.
Oh. So,
Yeah.
sorry, Danai, you're saying
Yeah,
something just now.
I was thinking about it buying at 6. If you look at with the new growth they've had, if you buy at 6 with this silver profit, this at 2.3 the dividend yield right now. So at $6, you get a 2.3% dividend yield, right? And they're going into new business. So to me, I can see space. I can see space for you somebody buying at $6 with a longer time horizon than just the dividend. They're looking for you over a year time or more, and they want some. The profits will come out. So more they get more profits from the company. The company continues growing. At $6, a 2.3 dividend yield. The dividend cover your thing there. It covers your fees of entry.
Yeah, more than
cover your
I
fees.
usually say like a 2 to 2.5%. It has covered your fees already. And if you have a low broker, you see, it already cover your fees at 6%, at 14 cents. Is 6%. It can cover your entrance, your exit, and still leave profit depending on the price you go in. And at 6%, if you are looking for longer term growth, I mean, they have the usual signs of any big blowing up junior market company. The first the first quarter profit is about half of the whole of last year's profit, and last year was a record year, that sort of thing, which it actually is. I'm looking at them now, and last year they made in the entire year 136 mil in comprehensive income, and for these 3 months, so that's what, February, March, and April. February to April 2020, they made 69 million. So that's wow. That is roughly half, a little more than half, actually. If you want to get technical, on the EPS, 5 cents to 10 cents. That is not a joke. It's a growing company. Like I said, I bought more. I'm comfortable saying because I've already bought some, and I'll continue to buy more. By the time you guys hear this, hopefully another day would have passed. Another day would have passed, and I've owned even more. But yeah, especially because if you look at the queue, there's some interesting volumes there that have been grabbed up. So for the people who are hungry, talk to your licensed investment advisor about that. Please. What else interesting has happened on the market?
We should give a big up to our previous guest.
Yeah, go ahead.
Big up to our previous guest on the show, Kwame Brooks. So we had Kwame speaking about Forex once, and very, very knowledgeable person. He recently got a promotion, so big up Kwame. In his new role at JMB, he's now the country treasurer. He's moved from general manager, treasury and trading and treasury, and he's now assuming the role of country treasurer. So big up Kwame, reaching new heights.
Yeah, big up Kwame. I mean, it was obvious when he was on the episode. I really like that episode, and a lot of people do like that episode. It's the Forex episode where somebody who actually knows about Forex has spoken strongly.
Somebody profitable in investing across the board. Yeah.
Yeah, so in case anybody didn't know, when I mean he said his title on it, but no, then I told his new title, and yeah, big up Kwame for this. Um, might if he's open to it, we could have him back on if he's open to it, because I'd
Yeah,
love to.
man,
Because I
definitely.
still get you still get told about forex things, especially in these trillionaire
Oh, yeah, yeah,
times.
yeah, yeah, bro. It's more. I had a deep dive into somebody's forex page today because I was incredulous. Uh, um,
Yeah,
the
yeah, the
they
things
talk
I'm
about,
seeing, boy,
yeah, man. So,
it's getting crazy.
yeah,
It is getting crazy out there. There are people. Trust me, be very very careful. Don't let anybody lead you astray. People who
yeah.
are
A friend messaged me and asked me
showing.
if I do forex, and I said no, and he said why, and I told him, yo, one, most people that selling it, the class thing, it forex, it's almost like a business model the way they do it now. Like
It
forex,
is a
why
business model.
it is a business model. Forex people
Yeah.
for a lot of forex people have one way of, yo, this is how we come across. They show you a couple profits a couple times, and then they sell the lifestyle heavily. It's a heavy lifestyle sell. They tell you they're doing this, they're doing that, they're doing that, and it's not really
Millions. You
you
make millions in
exactly.
months.
You hardly find them talking about, yo, this. They talk more about, yo, I buy this, I buy this, I buy that, and then they sell you a class and realize that, yo, the class full. Most people make a bag of money out of the class. You start wondering, yo, which one making more money, the trading or the class? So
Right?
yeah, so
Yeah. We've said
uh,
it. I've
so,
said it. We said it in that episode, and we say it again that people should be careful. And
mm,
yeah, the people who doing the class, I like saying this especially because I know I have a class.
mm,
The people who are doing a class to teach you something should be able to do that thing that they're teaching you and be able to
mm-hmm,
live off it.
yep,
Yeah. Yeah. And they should be able to stand up to any scrutiny. You should be able to
mm-hmm,
question them. You bring in an expert, they shouldn't be afraid or sarcastic. I've seen some of those people, some of the things I've seen, especially on Twitter, responses I see people start drag other people in certain ways, them going to people
yep,
about them mother, you're never going to see me go down that road. As passionate as I am, because at the end of the day, the thing that you're teaching should be accurate. You should know it. It shouldn't be a scam. It shouldn't require me signing up anybody else, and it should be
mm.
able to stand up to scrutiny.
Yeah,
All right, on its own. People who don't have that, I I I can't tell you nothing. Talk to them and talk to your licensed investment advisor
yep,
to see whether it is for you. And I don't want people to take this to say that again, because you know we're going to hear the opposite. I don't know why we're in Jamaica we're so extreme driven. It's not that we're against forex either, as you'd have heard on
yo,
that
listen,
episode
I
with
actually
Kwame.
want to learn that, but the
Yeah.
thing is, I'm not sure I can trust the sources. So I don't, the people that are selling forex still. Boy,
Mhm.
I don't know. It's funny because the people I know in forex are profitable. They're not talking about it like that. They talk about profits. And they talk strategies, and they're opening it. The name on Twitter, Jordan on Twitter.
That's the guy I wanted to mention again. I forgot his
Jordan
Jordan
Fibonacci.
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 Is that Fibonacci?
Yes, Fibonacci sequence is,
Yeah,
yeah.
yeah. I thought it was the Fibonacci sequence.
No, sir.
Am I saying it
It's
wrong?
an A. It's an A. It's an A. Yeah. So Jordan Fibonacci. Big up Jordan. He
Yeah,
talks
big him up
forex,
completely.
and he's always laughing at the boy, the notion of, I do this, so I need to sell you this. He says,
Right?
imagine Goldman Sachs approach and say, yo, I do this and this with forex. I'm going to sell their class on it. Like, that's not happening, right? People that are
At
successful in it. So he speaks about his profit. He goes deep into the motive behind it and whatever. And
mm-hmm.
he's not saying me no class. So you get me? So
Yeah,
it's funny because these are the person that you want to teach a class.
exactly.
The
In
profitable
fact,
guy just chilling.
exactly. I've seen more sensible forex on his page than I have from many a class page, and I've looked
Yep.
on a lot of those class pages.
Yep.
Yeah, yeah. Obviously, the people with sense always show, no matter what.
I think why they shy away. I think by forex people specifically that are doing it right, why they shy
Mm-hmm.
away from the class aspect is because they know what everybody else doing the class thing doing. Like they say,
I
I can't be that
understand.
scammy guy.
I understand. I understand too well. I do. I say it openly at girl. I say, yo, I am in a space where I talk, and a lot of the other people I see that try to do what I do, they're just openly scamming, and it puts even more pressure on me to ensure that what I am telling people is accurate, and what I'm selling people is something that can stand up to scrutiny, which it can. I mean, I don't worry about that, but I understand why completely because every day I consider not doing it. I consider not saying it at all. So I'd have to
When I
put
have
up
to
in the
force
comments.
you to start back classes, sir.
Yeah.
So
I mean, people thought I
pressuring
would
me.
know.
You pressuring me. You're running on start back class. And I was like, yo, what's up for the classes?
Yeah. And you know, the funny thing is, the second I start it back, I hear say, you see, you need the class to make money. I went months without doing it.
Oh boy, yeah, please nobody.
Yeah, exactly.
You
so
please
you have
one
to just
side and
make
the next side, Vic. So
yeah. And if people want to find something to say, they will always find
always
it.
find it to say, definitely.
Yeah, so after all of that speeches, big up Jordan Fibonacci. You have to girl him on Twitter, Fibonacci. I'm going to check to see how that word is pronounced. You're probably right. Fibonacci. It's a name of a scientist,
in class, no? Yes, and he formulated the Fibonacci sequence. So he formalized it as that thing.
Exactly. I just saw he said Fibonacci.
You're a ComSci guy though. You work with Fibonacci.
Huh?
You're a ComSci guy. You work with Fibonacci.
No, I know the Fibonacci. Again,
you know this, yes,
I know
it. You
in
like
my mind,
names.
it's
yes,
Fibonacci.
You like the butcher names, yes. Big up Miss Julie J.
Big up Jillian. Big up Jillian every time. So there's a big up to Jordan. There's a big up to Miss Jillian. Of course, there's a big up to Kwame. We're happy to have somebody with obvious class again on the show. We've had a good long run of classic guests.
Good point.
Yeah. And along that line, is it a segue? Along that line, I'll introduce our current guests. So let me give the people some context. We have, I think, 2 or 3 missing episodes that nobody has ever heard. This guest was on one of them. He had tweeted. He was contributing to our Twitter conversation.
Mm-hmm.
Actually, big up Miss Jilly J. See, I said it clearly.
Big up Miss Jilly J, because the conversation was around something.
She had said, yeah. So
she had picked some stocks, 138.
Yes.
And Pulse, and somebody had tweeted to say that, hey, the stocks Miss Jilly J picked at the time are now worth this. She showed the percentage gain and said if you bought them when Miss Jilly J said it, then you'd have had this percentage gain on it. Mm-hmm. And our current guest, he came in to say he came in to not disagree with the notion, but disagree with some aspects of it about based on the volume and liquidity of the market and those stocks in particular. And we just we called him on to have a conversation with him. But a really good conversation actually. Mm-hmm. I really missed that episode because I really liked doing that episode. One of those episodes that I was talking of.
Yeah.
I feel like this is one of them.
Well, that's good. The people like those episodes, as do I. But yeah, we had a great conversation there, and that's when I learned about what's it called, Time Machine on Mac, because it's the first time I've lost a file on Mac, and I have searched people for that file. It's supposed to be backed up in the cloud. Nothing. I have searched and searched and searched. We don't have it, and it's such a good conversation. So I was sorry for that because we came to a great end of the conversation, and didn't have it, so nobody has heard it. Even I haven't even heard it again, and we always wanted to bring him back. So this week we are bringing him back. He's the one and only Dymtro Ason. I'm saying your name wrong. I'm sure I'm saying your name wrong.
No, it was decent enough. That's fine.
Oh, wow. Okay, Randy, you should clap yourself right now.
Thank you. I will clap myself. But Dymtro, Dymtro, I struggled the last time to introduce you, and I'm going to struggle again, but I'm not going to struggle again this time because I'm actually just going to allow you to introduce yourself.
Indeed.
So you can tell me who you are and what you want people to know about you, what you do, blah, blah, blah.
Sure. Hi, everyone. My name is Dmytro. I've been in Jamaica for 2 years now, working for Digicel here. And all my career, I've been doing strategy consultancy, transformation, large projects. Yeah, that's my background. I have interest for finance as well, as a side thing. But yeah, recently I've just been posting a lot about communication in tech and why it's important, and how people can improve there, and also add into the conversations on Twitter about hiring practices and salaries and interviews in Jamaica, because I feel like there are lots of myths and misconceptions about it. When I talk to people or when I look at what people are tweeting about. So I feel like I can contribute a little bit there with some clarity, hopefully.
So
a point,
recently,
though. A point. Randy, hold on.
yeah,
A
go ahead,
point.
Dan.
He says he has interest in finance as a side thing. Well, he didn't say that he's quite qualified in the finance field.
That is true. That is true, Dmytro. Tell the people when you find it. Please tell them your finance chops, so they don't think that you're just talking
Just
off the
out
top
there
of your head.
talking.
Look, yeah, I did economics as my BSc. I did masters in finance in London. I worked, in house M&A, and yeah, I tried to finish the CFA as well, but I only did 2 levels of that. So I'm qualified, but I'm not an expert. I learn a lot every day. I learned a lot from you guys in your podcast. So
Wow.
Oh, very
Thank
often
you.
the mark of thank you, yes. First, very often the mark of an expert is I am not an expert.
that is
to me,
suspiciously
you're very
true.
sensible in your thoughts about finance, and you said a lot of things that are proven true over time. So, big up, sir, big up.
Yeah, and just so we can start it off so the people know where to find you. You are on Twitter at
Yes,
yeah, just my first name and my last name. So it's just Dmytro Ason.
Even I spelled that
Randy
wrong
can't
this one. Say
spell.
it again.
Yeah,
DMY.
DMY, not
Dmytro.
DY.
Yeah, most people spell
Yeah.
it wrong. That's fine.
Yeah, we think Dmytro, we got DY, but
Yeah,
Dmytro. Okay, and you're originally from? I remember
I'm
asking you that the last
Ukrainian.
time. Okay.
Yeah.
I now remember very clearly that part of the conversation. Sorry. Of course, I don't want to have the people thinking that we're leaving them out. So you are from Ukraine, which is, that's like what, Northern Europe? Mid Europe?
It's Eastern Europe.
Eastern Europe.
Yeah.
So almost Asia.
Well, I mean, it depends on where you're looking from, but between Poland and Russia is probably the easiest way for people to identify.
Wow. Wow. Big World War II country. Sorry. My
he
favorite podcast has
can't
been.
help himself.
I've been listening. They put out another episode again. I think that's what happened the last time too. And they're going through the whole World War II thing, hardcore history. And so I remember Ukraine, but it wasn't Ukraine then, was it?
It was part of
not.
the USSR, so yeah.
Then exactly, yeah, Ukraine. Anyway, and so you've been here a while, and you care about finance, and you are actually getting into local finance pretty heavily, and you do invest, which is what initially had piqued my interest, because I was like, oh well, your responses were sensible, to the point I was raised before, which was if I remember correctly, I think you raised a point about the general liquidity, so you're not necessarily able to get a lot of, like, people might hear about a stock flying through the roof, but you might not get a lot of actual volumes from that stock.
Correct.
Because maybe it went up 60%, but only on 30 trades over a period of 90 days. So
Indeed.
if you wanted to get in, you wouldn't get that level of volume per se.
And look, overall, I'm not the biggest fan of those quotes or Twitter stories where someone is like, oh, if you bought Amazon in 1995, then you would have $100 million by now. Although that might be true, but it gives people the wrong idea, I think, of the ability of perfectly timing the market and knowing when to buy and when to sell. And I think most people actually cannot do that. Like, most great investors cannot do that regularly with stocks. So I feel like it's given people a wrong idea of, let me go and try and find that company and time the market. But I think in reality, yes, that happens, of course, but there aren't that many people who've held Amazon or Apple or similar stocks
Over
through
that
all the
time.
peaks and troughs, right? And there were decades when Apple stock underperformed. So, it's a little bit misleading, I feel. But
Yeah.
that's my view.
It's good. It's easy to say that when you're looking backward.
Exactly, it's a survivorship bias, right? And I think
exactly
for tech companies, it's particularly important because there were stocks before early 2000s that were flying thousands % up within weeks or months, and it made lots of people rich, but it made even more people very poor and bankrupt, right? Because we now know of Apple, Amazon, and a bunch of other companies who successfully survived the .com crush, but most companies actually didn't, right? So if you invested money in Apple in 1999, chances are you also invested in 100 other companies which were worthless 6 months later, right? So that's what I want people to think about as well when they post those quotes, right?
Yeah. That I like that one, especially as somebody who has been guilty of posting things like that in the past. I don't think people get the tongue-in-cheek nature of it. But I have actually tweeted about how misleading those things can be, because you can say it for anything. You're right, survivorship bias.
Yeah, it's survivorship bias, yeah.
But well, let me not say what I was going to say until you answer this. So I should say, what kind of investor would you describe yourself as? I know there are people listening who would love to hear that.
Look, I think I'm probably a combination of traditional conservative investment, as in putting a regular sum of money into an index every month, and I do that abroad rather than here. And also the other part of me is opportunistic, and that's sort of what I do here. Just playing a little bit with stocks that are interesting, where I see some opportunities, and I get it wrong often, and I get it right sometimes. So I think it's an interesting way also for me of learning more about how the market operates here, what the companies do, getting to know people as well, right? I mean, I've been here for 2 years. It's a topic that's interesting. So for me, investing has offered me this avenue of speaking to you guys, following a bunch of smart people on Twitter, getting into, okay, that's what they do in their regular businesses. I think it's overall not the worst topic on Twitter to be interested in, and in life in general, right? Rather than liking another meme from social media, I'd rather learn something from it.
Yeah, I like that. I think it is one of the better parts. I'm biased, obviously, but I think it's one of the better subsections of Twitter, really. At least JA Twitter, Jamaican Twitter, I can say.
Agreed.
Yeah, it's a place where, and it's not all hunky dory. Not everybody agrees. It's not all nice, but it also doesn't go as far. And at the end of the day, I think everybody is interested in growing everybody else. I would like to think, or at least growing their money. So it's a core focus thing. I would hope. I mean, that's just how I see it. That is my own bias.
I mean,
so
it don't make sense without making money, right?
Yeah, but again, that might just be our bias.
True.
I just be our bias. We view the market in a way that I have to admit that not a lot of people view the market. But Dmytro, you do then have a lot of experience in investing, not just here, as you say you do it overseas. You do a lot of index investing overseas. Overseas meaning the US. You do
in the UK.
The UK, okay.
Yeah, because that's where I was based before. Yeah.
Okay.
I remember that.
Okay, so you what is the market called over there? The FTSE 100?
100, yeah.
Yeah. Well, that's an index, right? But
that's an index.
Is the actual market? What is the actual market called there? Just the LSE?
Well, yeah, it's just LSE.
Yeah, LSE. Did LSE get bought by that Hong Kong exchange?
I remember the Hong Kong. Yeah, they wanted. I think they wanted Nasdaq too. Did that go through? That's funny.
I know. I didn't have to check. Nasdaq would not go through. China?
No. I don't think Nasdaq went through. I'm asking if LSE went through, which is funny to me because Hong Kong relationship with London, with Britain. So that
Yeah.
the art reverse takeover.
Oh yeah, that would have been nice. But then I think the powers that be might have had a good idea of what was happening, because they would have known that the handover was imminent. I'm sure the Chinese authorities would have given them some amount of notice that we're not going to continue to keep up with this. So I think they dropped the bid. Looking at an article that says in October 2019, the Hong Kong Exchange dropped its $39 billion bid to buy the London Stock Exchange. There are actually a bunch of stock exchanges over the world that
Yep.
started to consolidate. Yeah.
Yep.
Something I hoped to see within the region, and maybe still will. Who knows?
It would be nice. It would be nice.
It would be nice. It would be nice if it raises the level of service. So I asked that though, Dmytro, because you then have seen, so you've seen the London Stock Exchange's sort of market pacing. You'd have seen some of the Nasdaq. Have you ever done anything on the Nasdaq?
No, I don't.
Yeah, okay. And so, well, you've seen London, which I mean, they're at that level, they're all pretty much the same. A Bloomberg screen and a bunch of stocks. But you have seen that, and in Jamaica, you say you play around. When you say play around, you mean you do some amount of short-term plays, I guess.
Yeah, I do, and some stocks I've kept for longer periods of time as well. But when I say I play around, I mean I don't put money in that. If I lose, I will go broke, right? So
Okay.
it's more of a sort of smaller sum invest in compared to sort of the main, more, let's say, risk averse investment on London Stock Exchange.
Mm.
But yeah, the points that I made before hold. I mean, the market in Jamaica is interesting because it's volatile, right? So it's higher volatility, lower liquidity, which creates interest and opportunities at times. Also, as you say often on this podcast, right? Information dissemination is not perfect, as in it is delayed. So sometimes there is a delayed reaction to significant announcements, news, quarterly or annual financial releases, which creates an opportunity for people who can put several things together into one, and see where it's going, which makes it interesting. Also, despite the COVID crisis and stocks on Jamaican Stock Exchange being down overall, there are a bunch of companies and stocks of those companies which are not doing bad, right? So again, it's just interesting to try and learn from trying to identify those opportunities and do something with them.
Indeed.
Yeah, that's great. And great. And so people, you've seen a little bit of why it is. Why we're not going to go back into the old topic of what we spoke on at the time. Yeah, you've seen a little bit of why it is that I really wanted to have Dmytro back on, because it's somebody who obviously knows enough of our market. You've made money on the market, Dmytro, yes? A clear yes or no on that, yeah. And but also didn't come up with their background being our market. So, it's the ultimate objective view, because I mean, you don't even work for a listed company either. So it's not like you have a horse in the ring, You're just somebody who has seen a few markets and you're now seeing this one. And outside of that, you have been, as you said on Twitter, you've been talking a lot about communication and effective communication, especially for tech communicators, I know.
It's it just all started during COVID, right? Me being stuck at home and working very long hours, but ultimately you need to change sort of the conversation and change what you're doing. So I just started to explore stuff that I was always interested in, and stuff that I'm exposed to in my career, right? Because I work a lot on technology change and technology projects, and with people who do tech. And that one thing always bothered me in a way, because I think there are lots of people, including in Jamaica, who are really great in tech, as in their core tech job, but they're not necessarily great in communicating with the rest of the business community, right? And I feel like that's the thing that holds them back, and that's the thing that if they improve on, can significantly improve their career trajectory, their earnings, their opportunities in the market when it comes to other jobs and potentially their own businesses, right? So yeah, that's why I started exploring the topic, and I think the related topic for me overall, and that's again another thing that I think is relevant here, is it's not just about tech, right? It's not just about people who do coding or engineering or infrastructure. Overall, I feel like many people I'm interacting with and people I came across when interviewing or working together would benefit from upping their communication skills, right? And I think it's not rocket science. Everyone can learn it. It's just that you have to approach it in a practical way rather than through reading books and articles, because that helps as well, but only to a smaller extent, in my view.
Yeah, that is true.
Indeed. Agreed.
You're preaching to the practical choir here, because we are nothing if not disciples of practicality in investing. And you also touching a hot topic nowadays, because that topic of employers in Jamaica and employees and jobs and what
got
you
some
can do to
recent
increase.
noise around that.
Yeah, what can you do to increase your earnings is something that I know a lot of people care about, especially new graduates. And big up all the new graduates, people who made it, especially the class of COVID, the COVID class 2020. I mean, you made it through probably one of the roughest semesters in a long time. But Dmytro, and you also speak to a lot of execs, as you say, in your job. So you saw it there. So you're one of the people who use your COVID time properly.
I'm trying to, because and I'm not a big fan of those quotes on social media where unless you come out of coronavirus with a business side hustle and whatever, you're stupid, because I don't believe that, right? Everyone lives in different circumstances and people have different level of obligations, right? So it's perfectly fine to not come out of coronavirus with a side hustle or a business.
Yep.
Or,
Exactly.
but I think for many of us, it does offer that opportunity to kind of reflect on what is it that we're doing with our life, with our career, what can we learn, and when it relates to sort of salaries, hiring, employment in Jamaica, getting through interviews, getting jobs. Again, I see a lot of stuff on my timeline, and a lot of stuff that I see is not factually correct, right? It's people's emotions and perceptions rather than objective reality. And I just feel like it's I spoke with someone today about it, actually. To me, it's in a way a mindset problem, right? You can have a mindset of the system is rigged, there's nepotism, corporations are intentionally trying to underpay us as much as possible, and nobody gives jobs to people who are qualified. But you can also have the mindset of, well, I can learn a little bit more about that. I can work on my communication skills. I can work on my CV. I can network with the right people, and I can land the jobs that I want. And my advice to everyone is, adopt the mindset number 2, right? Don't adopt the mindset number 1, because mindset number 1 in a way is a self-fulfilling prophecy, right? Like with many other things, if you only see negativity, if you only see injustice and wrongdoing, and you see everything as sort of a risk and challenge rather than opportunity, then chances are you're not going to succeed, right? Especially if those views are not actually correct, right? Because that's again my point. And obviously, look, all these problems exist, right? I'm not denying that, those problems are totally absent from Jamaica, but they're not absent from anywhere else either, right? It's just that it's your conscious choice of, are you going to be focusing on the opportunity area, or are you just going to sit there and say, oh, okay, my CV is perfect, I've sent it to 100 companies, nobody hires me, that's probably because there is nepotism, right? So
You don't, no links.
yeah, and that's what I want to share, and I'm actually glad that most people reacting to my tweets about the topic are actually agreeing with me, and the good thing is I see people who run successful businesses agreeing with me. I see people who are in startups or are in corporations agreeing with me, and I think that's just a confirmation that you got to look at that brighter side as well, and there are ways to do it, and to that mindset. Again, it's not just sort of negative and positive mindset; it's also fixed and growth mindset that we've all read about in books. You can have a mindset of I'm already qualified because I graduated from UV, and after 3 years I know everything, so they should just give me the job and pay me whatever, and then I'll just get a brand new car and live in my own apartment. I mean, that's one mindset, right? The other mindset is accept that no, you don't know everything yet, and you will never know everything, but you can try and learn some new stuff every day, and you can take the opportunities that are in front of you, and through working in those opportunities, you get better opportunities next month, year, 3 years down the line, right? But that's a harder path, right? Because you can't give yourself an excuse immediately, right? You actually need to put in the work. And I think, what I'm trying to encourage people to do is put in the work before putting excuses forward. That I feel works better in my personal experience and the experience of many other people. Right?
Well, I can't say you're wrong, but it's been so long for me that it just seemed like an obvious thing, and I've learned the mistake of when I think that something is obvious. It might just be obvious for me, but I'm with you there. If everybody is being pushed in a direction that is not determined based on the facts of a situation, then you won't actually get the fixes that you want.
Yeah.
And I think that's what's happening. I think that's literally what's happening, where we're all responding emotionally about something, and we're then deciding that, well, it obviously can't work. And in Jamaica, or obviously can't work always ends in, well, we have to go foreign. We have to fly out. Yeah, them can't pay us here, them will pay us in foreign. They'll pay us and I think what happens a lot of times is that people go to foreign, usually America or anywhere else, and they realize that it doesn't quite work that way.
Yep.
It's a really great point, and again, I've spoken to a number of people about this, and there are a couple things that you got to realize, right? First is when you go abroad, right? And by the way, I encourage everyone to go and work abroad. I've never worked in my home country. I hope I get an opportunity at some point. But I think it's a great learning experience for life in general. But anyway, what people will realize when they go abroad is first competition for whatever job that they're trying to do is significantly higher than it is locally, right? And secondly, there is a different expectation about the level of productivity, right? And I feel like that's the argument that not so many people are willing to hear, because you hear a lot about, I want to be paid X, or I want to be paid X plus 20%, and salary in the US is higher. First of all, for sort of knowledge workers, salaries in the US or in the UK are higher, but they're not as dramatically higher as people think, right? They're not double. I mean, I worked in London. I know exactly what you earn as a developer or project manager. They're not double or triple Jamaican salaries. That's one. And two is the level of productivity and output that's expected from you elsewhere is just different, right? And that's the part that people don't usually like to hear, because you actually got to deliver more and to a different standard to be compensated, according to the US or UK pay scale, right? And that's that's something that guys who are Jamaicans, are based in Jamaica but work remotely, confirm in conversations, right? That's what they say. It's not like you can deliver the same output and miraculously get paid 5 times more, right? You can get 5 times more money, but you have to probably deliver 10 times more output, right? So that's something I want people to think about as well, because that's how sort of this advice works for me personally, right? I like to look inwards first, as in, what can I do differently? How can I improve what I do? How can I learn? And then I look at, okay, so, what can I get for it, right? And I think that that mindset is useful, right? But again, that's my view.
I agree wholeheartedly with that. People generally, I think they take the easy route of, oh, yo, I didn't get the job, so it's not me, it's the job. I remember a thing there, you call it. I remember when I applied to a position somewhere, something at a pension fund actually, and I just started. When I just started working, I wanted to be in the investment field. I wasn't doing what I wanted to do, and I wanted, I thought, yeah, that would be where I wanted to go. That's a good point to move off from. I went there, answered the questions and whatever, and didn't get the job. I was reflecting hard on myself, saying, boy, maybe I didn't know, maybe they have a person already, whatever they want. And when I actually got read myself and look back at it, I could see where, I never answered this question properly. And what they actually wanted in a candidate, like qualifications wise, I wasn't fully up to scratch. So it's very often not you, but it's not often the company, but there's more on your part to be done. If you feel you deserve it, then deserve it. Put yourself in a place where you're the person for that job. Otherwise,
and look, I'd say even if it is the company, and even if it is totally independent of you, it is actually more useful for you to think that it's because of yourself, right?
Yep.
Because I'd rather be convinced that I didn't get a particular job or opportunity because I didn't do X, Y, and Z good enough, because then I can work on X, Y, and Z, right?
Yep.
Even if it wasn't true. Whereas, if I'm convinced that it's because of, company or, world capitalist conspiracy or whatever else, then, I can't learn anything from that, because I'm not going to fight global, capitalism. I'm not going to fight nepotism, right? So, then I'm just stuck in where I am.
Maybe if we tore it. Sorry, don't listen to me. I say maybe if we tore it down.
Say again.
I was messing around. I said maybe if we tore down global capitalism.
I've seen those sort of videos on Twitter as well, and I'd rather not go into that topic.
Yeah, I have a long rant in me for that type of talk, but I don't think today's the day for it.
Yeah, please, no, it's not. It's not the day for it, and I'm not sure that tearing down global capitalism would help anybody get better jobs.
Oh,
no,
okay.
I don't think so. And I actually had a conversation on Twitter with someone a while ago, and it got heated, and that's where I decided I'm not going to engage in those conversations. But funnily enough, the only people who praise communism on Twitter are people who've never lived in a communist country. And I'm coming from an ex-communist country myself, right?
That's why I'm laughing.
I was born into communism, and I don't remember it myself, but from the tales of my parents, nobody in their sane mind would actually want to go to back to communism, right? So, it's funny how, the people who preach communism are always, US based liberals, right?
What I find funny,
so yeah,
I see business owners,
I'd say if you're considering communism, just go travel to Eastern Europe and talk to people who lived there, or
Cuba's
go
right
to
there.
Cuba, and
Yeah.
try to buy, a shampoo that is not one out of two different shampoo kinds that you get, and then maybe
Yeah.
you'll get a slightly different idea.
And the joke is, I see also people. I see people like one day they're saying, "Yo, support my business." I want, and they talk about where they want to be, like how rich they want to get, and how far they want the business to push them. And then the very next day, it's eat the rich.
Yeah.
And I'm saying, you don't understand that dichotomy. You want you hate
There's
the
a
thing
very
you want to
good
become.
British expression about it. It's like you can't have your cake and eat it, right? So
Yeah,
that's
definitely.
that's the point. You either embrace sort of the the positives and the challenges of a particular system, or you don't get any, including the positives. And that's my parallel into sort of job market and hiring opportunities and so on, because again, you can't have both things. Like you can't have US salary and Jamaican productivity, right? And I'm generalizing now, right? But if you look at economical stats of Jamaican productivity, it's basically been stagnant since, I don't know, 1960s or something. So
it has not risen with our growth. That is true.
Yeah.
Our productivity has.
So you can't have both of those things at the same time. And of course, that's sort of the macro view, but the micro view is, there are people in Jamaica, in the Caribbean, who are doing really well in their careers, who are earning really good money, and who are, money is one thing. Another thing is like they're doing some really exciting things. So the opportunities are there. Another thing that I always tell people is, actually good talent is in high demand, right? So, it is true that firms are fighting for real good talent. Jamaican and international corporates that are based here are actually running programs to bring Jamaicans who are in, managerial positions in the US and Canada back. That just shows you that there is talent scarcity, but it's not the scarcity of the level of we don't get people who apply for a job. Yeah, there are hundreds of people who apply for a job, but it's just that not all of them who think they're qualified are actually qualified for it. But people would rather hear about it in a different way and think, oh, okay, they will only hire someone who is US educated and who's been living there for the 10 years. But the truth is a little bit more complicated than that. So I'm just encouraging people to, try and view it from a slightly different angle, because I think that different angle just gives you that route to improving your skills rather than an excuse to not, right? And that's better.
Yeah. And I know that Dmytro has pissed off half our audience.
It's an interesting conversation, because I think it relates to a lot of things you guys talk about when you talk about finance, and you just talked about Forex a while ago, right? And again, me coming from a developing country myself, I feel like I can make that observation without sort of people hating on me, hopefully, but that hopefully, but that mentality of get rich or die trying, and get rich very quickly, and get rich in this very materialistic way of rich through a watch, a car, a house. I know that same mentality from back home. That's a feature of a developing economy, right? Where people didn't have anything and suddenly some people have something. But I think for someone who's actually interested in a long-term growth, be that in investment, be that in career, be that in their own business, you gotta look past those superficial things and think about like proper measurement of success rather than measurement of success through the car that you're buying, and that's that kind of relates to the whole conversation, and that's how this whole Twitter discussion about salary started, right? Because people go and say, oh, I'm a graduate and I'm getting salary of X, and I agree that X might be low, but how am I supposed to pay for my own rental, my car, my bills, whatever? And I'm like, look, guys, I mean, who told you that age 22 you're entitled to your own car and renting your own apartment? People in London who earn probably 3 times more than you, even adjusted for inflation and sort of PPP, they still earn more than you. They share apartments. They don't have a car. They don't buy luxury things. They don't go to expensive hotels and spend all their money there. So why do you think you can do it here, right? And they actually can afford it. They're just not doing it. So it's I think it's a complicated topic because there, like I said, there's lots of misconceptions about it. But to me, it's like, again, it's priorities of your early career, and I've made those same mistakes when I just started working in London, right? I got my first salary. I thought I'm an oligarch already, and I wasn't, right? But I went on a shopping spree and expensive restaurants and going out every Friday and Saturday until I realized 3 months later that I had a lot of money on my credit card is negative. So I can totally relate to kind of where this is coming from, but I'm just trying to say, off the back of my experience, you got to look past that. You got to look past that superficial part. Focus on developing your skills, developing your career, and just taking it from there. And then another thing, I spoke with someone about it today as well. We're living in 2020 now, right? I graduated in 2008 before there was Twitter and Wikipedia and all those things. It's almost a sin today to graduate from university only knowing the stuff that you were taught in the classroom, right? I mean, it's just crazy, how, people say, okay, so I graduated today, but they never taught us how to write a resume. I mean, I'm like, are you serious? Like, do you really think that someone needs to teach you how to write a resume? You can go on the internet and there's like millions of sources for that. Nobody told us how to perform on an interview and do a STAR technique. I mean, come on, like just Google it, right? So I think one thing that I feel like people need to kind of realize a little bit more is, first, we're living in an age where there's a huge democratization of everything, right? So where you live, how rich your parents are, whether you had opportunities in your childhood to learn more or not, it doesn't matter, right? Because as long as you have a laptop and a broadband connection, which still a lot of people in Jamaica do, you're already on par with millions of people all around the world, right? You don't need to pay anyone to to read Wikipedia or to watch TED Talks on YouTube. So so to me, that removes significant part of the argument where people are like, oh, but nobody taught us this and nobody taught us that. Well, yeah, just accept it and just go and learn it, right? And there are people in Jamaica who do that. I know it for a fact. I'm talking to those people. I'm hiring those people, right? I'm working with them on a daily basis. These people are here, so just realize they're no different from you, and they're doing those things. So instead of saying, oh, there is no opportunity and, I can't get, a job I want, or I'm not being paid what I deserve, just do what these people are doing, right? And trust me, you'll get there.
Yeah, that personal responsibility, you're not going to win many friends with that. I can tell you.
I think, I'm not interested in winning millions of friends. I'm interested in talking to people who kind of try and relate to what I'm saying. And, I have my selfish interest on Twitter as well when I'm posting stuff about, hiring and so on, because I'm actually hiring, right? I actually interviewed someone who DM'd me on Twitter on Monday. and that interview went
Really?
really well. Yeah, and that's the thing that people got to realize as well. And maybe not every hiring manager is on Twitter, but loads of hiring managers are on LinkedIn, and you can network with people there. You can do it on Twitter as well to some extent. Business owners are on Twitter, so that's the most democratic way to network in that there ever was, right? You don't have to go and buy a suit to DM someone, right? You don't have to fly to a conference to reach out to someone on LinkedIn. And again, people are already doing it, right? So and these people are sitting right next to you in your classroom in your final year.
Yeah.
So just go and do that same stuff.
Exactly. I think it comes back down to just the sort of people who acknowledge that you're not good. The world doesn't owe you anything. It's a harsh thing to tell people, all right? Especially in Jamaica, because we don't all have the same levels of opportunity, as you've acknowledged. And there are lots of people who don't have the laptop or the broadband connection or
Sure.
whatever. But digital does. I'm not giving digital a free ad, but I must say that Wikipedia is free. From I think both networks, phones. Even if you don't have any data, you can access Wikipedia.
I
And
think so.
I
Yeah.
remember, yeah, I remember when I was young. I remember when that before even Blackberries was a big deal. I remember the very first time I saw data on a phone and Google was around, and I realized that was how the world was going to change, because I now can wonder something and find out immediately. And I think I might have been fresh out of high school or still in high school. I don't know where it was, maybe early college. It wasn't a very popular thing. It was a big deal, and I thought it was such a big deal then. And here we are in 2020, almost 2 decades later, if not more, and there's still people who just their first instinct is not to go and look something up if they
It's
don't know.
weird.
The first instinct
People
is
tweet
And
questions,
you,
certain
yeah,
and
questions.
and the worst part for me here is like we're not talking about people who don't have broadband connection or laptop, right? I acknowledge that there is a large percentage of population in Jamaica and any other developing market who are like that. We're talking about
mm-hmm.
people who who would rather retweet some stupid stuff of which kitchen out of those four images do I pick, yellow, red, or white, or which
Dmytro, you're not
car,
going to get my listeners angry with me.
or which car am I driving to a date? I mean, look, you have
Yeah.
time for that, right? You clearly have internet access because you're doing that. You're being angry or happy about whether Saint's bald daughter is named Olympia or not. I mean, you spend half an hour on that conversation. Instead of doing that, just go and learn about how to update your resume, right? So, I feel like sometimes we're again, telling ourselves something or trying to convince ourselves, and wasting that energy that we could have spent elsewhere more positively, right? And
Mm-hmm.
again, people who are tweeting on Twitter about lack of opportunities or limited opportunities or low salaries are all people who could instead spend half an hour on updating their resume, right? So that's probably a little bit more productive, and also you learn. When you try and improve things, you learn best that way rather than just sort of passively consuming the content, right? So again, I probably haven't made too many friends, and people who
No.
are IT project managers, I'm actually friendlier in real life. So if you're looking for a job, just
No, no.
DM me.
It's
In
funny. I know
any
somebody that
case,
might.
I promise I will let you browse Instagram if you want. So that's fine as long as we're doing what we're supposed to do. So yeah.
Okay, that's perfect. You know what? Now you said that. Let me pause and say, guys, if you listen to this, you're thinking, "Wow, I need to know if I can get a job with this guy because I'm into IT or whatever." Dmytro, tell him your contact again. I do not want him to contact me to ask me how to get to you. I get a lot of those things.
Yeah, look,
Tell him.
just follow me on Twitter. It's Dymtro Ason. I repost the jobs in the company I'm working for. I tweet about how I interview people. So again, that's another thing, right? I mean, if if you want to interview somewhere, there are actually people who tell you exactly how they interview. So, or the people who tell you exactly what they're looking for on the CV. And even if you're not interviewing for an IT project manager role, chances are, my advice can actually be applicable to a slightly different job too. So, and just look that up.
Okay, that's strong. Okay. Well, Dmytro, in case anybody's still here and not pissed off, Dmytro also knows about stocks. Oh Lord. What I don't even know where to go with this. You say you've been having fun with some of the stocks in the market. What have been some of your fun ones? We mentioned Mailpack earlier. Did you manage
Yeah,
to?
yeah. I actually applied for Mailpack IPO, and I got some shares allocated through the IPO. But I was also buying Mailpack at I can't remember exactly, at 130, 140, 150, right? So I think my average probably is 145 or something.
Oh, nice. You
So
don't know exactly?
no, I don't know exactly. I think it's around 145. So I'd have to look it up. So
You should use
there,
this dashboard. There's this
there.
wonderful dashboard, and if you've heard about it,
Yes, I've heard
evernickel.com.
about it. I've heard about it. I tested it. It didn't actually work for me. So
Oh,
I,
what
I,
happened?
well, it just didn't update. So I ended up doing it myself, and I'm just updating it whenever I feel like, and I probably haven't done it for a month. That's why I don't
Okay.
remember it. So yeah, look, I've invested. Well, I mean, some of it I wouldn't even call investment, right? Because the holding period was just a couple of months.
Mm-hmm.
But yeah, I've invested in some stocks, and I'm also that's another thing that I think is important to discuss when we're talking about investment is I'm holding a bunch of stocks I'm down on, like QWI is a really good example, right?
Mm-hmm.
And I've been holding it for a very long time.
Since IPO?
Yeah, and I've actually been buying it continuously at all sorts of prices between 50 cents and 90 cents since. And I still believe conceptually it's going to be a good investment. So
Oh,
but
really?
yeah.
Hold on. You held it all the way through all the travails, the up, the down, because it did go back above $1.
Yeah.
When last was it above $1?
No,
Early
so
in this year, early January, yeah.
yes. So yeah, I've held it. I was just dollar cost averaging it all the way. So again,
Mm-hmm.
my my current average is at about 90 cents, right? So I'm down on QWI. So yeah,
Oh,
but I think that's the part that people don't always openly talk about, right? Because it's much easier for me to go and say, oh, I've made X on Mailpack, or I've made X on Lab, or I've made X on
mm-hmm.
some 1 week holding of SVL when I've noticed it going down dramatically, right? I mean, it's all fun and it's nice, but you know I've also I also have a couple stocks in the portfolio that are down, but I believe in the longer term prospects of these stocks, so I'm okay there. It's you're not gonna make money on every single trade. That's just a reality, unless you're exceptionally good, like Randy. But I'm not as good as Randy, so
Oh, thanks for putting me on the spot.
so I've got negative holdings in my portfolio as well, but that's fine.
Oh no,
I'm
as do
learning from
I.
it. Yeah.
As do I. As do I. As do I. That's just a part of the game. And I've realized that over the years that people don't hear. I'll say it again. Not even the preamble. I'll say it again. You only down if people to grow notice. If you set my investment theory is you need your goal, you need your time. If your time passes and you haven't hit the goal, or and you're negative, you're below where you started, then you've made a loss. Now I set my goals out, and so I have been fortunate enough to not have to have like a portfolio that's bleeding. but
Yeah. And
meaning actually negative. But no, it's still their losses. I mentioned like the heavy loss that when Corona hit, the entire market went down. First week of March, at the end of March, was a hell of a drop across the board for a lot of people, myself included.
yeah.
Worse as I think as being lazy. I think we're just coasting. Then I feel the same way. And we're just coasting by then. So when that hit, it was like it jerked me into
Yep.
what the hell is happening. I had to start hitting the market hard again, which I did. So it was good for that.
But I
But
also think that it's it's obviously not how you think about it when you have holdings that are going down. But I feel like for a number of investors in Jamaican market, that is a good experience, right? Because they've had experience of the past couple of years where most of the stocks were only going up, similar to what's happening in the US right now, right? Although it's great personally, I think you don't learn as much from everything being in green as you do from certain things being in red. And it's kind of, again,
100%.
it's a parallel to career and business. People learn from setbacks, not when everything is going exactly the way they want it to go. So I'm not saying that you should be happy about losing money. Of course, nobody is, but you should look at it from a slightly different perspective. That's my point. So yeah, and look, I think there are opportunities in the market, and people who listen to you hopefully have picked those up. I mean, you've been very vocal on quite a few of them, right?
Quite a few, yeah.
Pulse is probably, I mean, if someone is listening to your podcast and has not invested in Pulse throughout the last 18 months or whatever, then they're doing something wrong. But yeah, ultimately, I think there will be trades or investments where you lose money, but that it's like you say, you either keep sitting it until forever, or you rebalance and you make something else out of it. And I think the latter approach probably works. But then again, I just want to point this out again. We talked about it at the beginning. For me, Jamaican market is not make or die sort of place, right? I'm not putting money in it, which I need tomorrow or in a year's time or in 2 years' time. So, my perspective is biased in that sense. So, but I think, for someone who's put all their money into the market, their view, and if they happen to buy QWI at IPO only, and they never bought it, when it was down, then their view would be different, because they're down from whatever 125 or 135 to 0.76, right? So
that's
that's
40%.
yeah. So
39.2.
So that's kind of another way of looking at it. But I think people who listen to you hopefully did better than just that.
I don't know. That's a good question. You know what? I shouldn't say that. I get DMs. I get DMs of people who are like, you've shifted, and I like that and people have done grow. Those two things are like, you've shifted how I look at investing, and I've made XYZ. Somebody messaged me, I won't load them up, but they messaged me last week actually, just saying thank you, and that they're up. The same exact thing. I've shifted how I look at investing, and I'm up 75% on one stock, and it's good to hear. I like that. And what I don't like just to hear that people have made money. I like that people learn exactly how to make money.
Correct. Yeah. Look, because if you just put money into something without properly understanding it, and this is where we go back to Forex, because I'm very anti all this Forex craze. And yeah, you can probably make some money by accident without even realizing how that happened. But it's not very good from two perspectives. One is, you don't learn anything from it, and second, you're probably inclined to put even more money, and then eventually the point when you lose it all will come. And in case of individual forex investment, in a way that is being preached on Twitter and Instagram, that point comes rather soon. So
Yeah, yes,
yeah.
rather soon. Have you done that also? You've touched forex
No, I
officially?
haven't. I haven't.
Okay.
Because I've done MSc in finance and investment. I've studied with people who actually were doing forex as their day job, as in their day job was currency trader
Hmm.
for Commerzbank or Deutsche Bank in London. And
Hmm.
first, these people were probably one of the smartest people I've ever encountered. In a sense, just very quick, very analytical, very mathematical, right?
Hmm.
I think that helped me understand that the idea of making money out of your bedroom or bathroom by competing with people like this who also have the whole machinery of super
Hmm.
quick algorithms and supercomputers and years of training is just I sort of believe there are people who can do that consistently over time with with some serious volume, but
Hmm.
I'd rather believe that I'm not good enough and not even try than try. It's like it's same as casino to make money. I mean, it's fun if you just want to blow $50 or $100 on it, but I don't believe I'm smart enough to beat someone in poker, so I'd rather not even try, right? And I think for that sort of I'd say people who think that they can just go and learn forex without any background or kind of understanding of math, stats, and those types of things.
Hmm.
Just stay humble, right? Probably try and do something else first and see how that works, and then you can try forex. But yeah, that's my view.
Yeah, yeah. So for people are always disappointed when they hear that we're not huge on it, but like it's not one of the things that we push or talk about heavily. I mean, I still have the invitation open to anybody who is actually doing forex sensibly and has been doing it for a while
Yep.
to contact me. Let me know if you have if you can have. I'm more than willing to have on the podcast a good conversation about the reality of forex.
Mhm.
Yeah, and look, I think you made a really good point at the beginning, Denai.
Mhm.
It's been pushed as this lifestyle of, I take my laptop
Yes.
and sit, next to my swimming pool, driving a supercar, and I'm in Monaco or somewhere. Um,
Yeah.
and I'm overall just life tells me that there is no shortcut to success in any sphere of life, right? I mean, and again, it's like the way I like to think about it is maybe there are people who can within 3 months become billionaires or whatever, but I just don't feel like I'm that person, right? So I don't really want to try, and I think this is where this lifestyle selling is it's working here, right? Because people are attracted to it, and people are attracted to it in most places, but in developing economies first and foremost. But that's there is rarely a field somewhere in life where you can just suddenly become successful, and I don't know why forex would be one of those fields, because nothing tells me that it should. So yeah, that's just my way of looking at it, and maybe if other people try and look at it similar way, they wouldn't be losing so much money.
Maybe I don't know. You have any idea why, Dana? You have thoughts on why it grabs so many people?
One,
Because
the lifestyle sell is easy. So I did a deep dive on somebody's page today, and looking at
mhm,
his page, he has over time on his Instagram page,
mhm,
he has a tab there. You know the tab where you save as to save stories. and he says
Okay,
when he
yeah.
talks about his profits. So over time, he's accumulated some profitable moments, and he's put them up there. And I'm watching it, and in my head, I'm like, I want this to be true. Like, I want it to be true because that means it's possible, and I can do it. And then everybody, if a man talking about he make 500, he made 5,000 US a day, right? And I make not even half of that for the month. Of course, I want this to be true. That means I can do that too. This guy can teach me, and then you fall right into the trap, and then he's showing you things that you really want. Yo, you see the Porsche, you see the Benz, you see this guy. Wake up. He wakes up later than you, and then he goes to his pool to do his work. Of course, he wants it to be true. So it's an easy sell. It's sell the lifestyle and sell the possibilities. Of course, you can fall for that easily. Versus running down I tell you about stocks. So we make example stocks, but it's not a the question we get very often. Oh, you day trading. Day trade.
Every single person messages. Even I say it, they message me and ask.
Yeah.
Even as I say it, they hear me like there's somebody listening to this now who for some reason will still message me and ask me, how do I day trade? And what do you have classes? This class you teach the day trade. Even though I say clearly that is not what I do.
I mean, I also like, guys, if you get a guest who actually does, very regular day trading on JSC on some reasonable volumes, I would like to hear about that because I mean, it's just not really technically possible, right? Because
no, it's possible. Well, you know what? What do you call okay volume? Maybe that's what we should hear. What do you call like what's a dollar level that somebody would trade regularly and you'd like to
I don't know, day trade, let's say 500,000 Jamaican on a day as a volume
every day.
I think that happens. Wait, hold on. What do you call day trade? Like proper day trading, NASDAQ day trading? So a $500,000 goes in and hopefully a $500,000 plus comes out every day?
No,
or on average
not every day, as in multiple times a day, as in you do multiple trades every day. Sorry, multiple trades within a day. That's what I call day trade.
Of a $500,000 or more.
Yeah. I mean, I just picked up a random number.
Yeah, no, but I wanted to know the amount because
you could probably do that with 10,000 Jamaican dollars. Yes, but you won't be able to do it on larger volumes, and also like the number of stocks on any given day you can day trade on is limited as well, right? Because those are either large cap stocks, like your NCB, QWA, whatever, or these are the stocks that that are probably smaller cap, but there is a significant event, either financial or a news event that occurred that day or a day before, like mailbag the other day, when it was Friday. These are the times when you have like millions of stocks being traded, but on an average day, if you look, like there will be probably only several stocks where you can trade any reasonable volume so that you get it and get out same day and you make a margin. But also remember, the 0.5 or 0.75 commission in, commission out, GSC fees, right? So it's
GCT on top of both of those, so it comes up to maybe 1.5%. Yeah, it's not as easy.
Yeah, it's not. It's just not as easy technically, right? You can do it on very large, very liquid stock exchanges like US, UK, but you can't do it as easily on Jamaican stock exchange. So that's just my point. And then another thing is also, and I think that's the part that people who don't day trade miss. It's not your. It has nothing to do with your relax and sit at the pool with your laptop type thing, right? I don't know if, like I've seen traders at work, and I've seen traders sort of outside of work. It's a very specific type of
High
personality
stakes,
is required, right?
tense.
Yeah,
Yeah.
these are people who are like, they can't wait to finish their point, right? They're just so quick in everything. Like their focus, their attention span also is not necessarily very long. Like
No,
it's switching
it
all the
attracts
time.
ADHD.
Oh, Randy,
So
It-
you know, we could do this. He's talking about it. It sounds like
I listen to him drag us. It's all right.
it does attract a
Yeah.
certain personality and intellect type, but for anyone who thinks that day trading is or Forex for that matter, because it's effectively a similar thing, is
Yes,
anything
it is,
like
it is.
a relaxed, I sit at my table slowly drinking coffee and like playing with my dog,
Yeah.
or taking a nap, or swimming in the pool. You can't really do that, right? Because in that day trading environment, you constantly glued to like 2 or 3 screens at the same time, and actually it's nerve-wracking, right? And that's the part that this is why, that's another factor for why I would never be convinced that someone can combine that amazing lifestyle of doing nothing with day trading, because it just doesn't work. It's like it's like telling me that you can work in a corporation and not have your in a corporation in sort of a managerial role, and not have 80% of your diary filled with meetings, and you have complete choice over what you do at 12 o'clock
Yeah.
or 2 o'clock. It just doesn't work like that. So I just feel like people who want to go and try Forex or whatever, by all means, but just just think about that. It's not the glamorous sit at the pull thing. It's sit in front of 3 monitors and go crazy. And by the way, people who day trade on with some exotic stuff like derivatives or options trading or spread betting. We've all read this horrible story in the US about a 20-year-old kid who traded on Robinhood and committed suicide with minus $700,000 on his account. That stuff is real. There are a lot of stories. Not everyone ends up being suicidal, but people go bankrupt and people lose money because they get over leveraged. They don't properly understand the financial instrument. I've read a story about how thousands of people lost multiples of what their trades were when oil prices went below zero, right? So so again, it's not your sort of pleasant hobby like thing. And I think again, I like making parallels between the topics, right? It kind of brings me to the point of stuff that you also see a lot on Twitter and so other social media about how do you do nothing and create some source of passive income, and just go and spend 2 hours on this and learn how to do a course, and then you'll just sit back, relax, and watch money coming in. That thing just doesn't exist, right? There is no reasonable occupation. I mean, I don't know, maybe selling drugs, but let me not go there. There is no, but there is
those guys work.
There is no sort of professional occupation that just allows you to create something on the side. And this is why I also hate the whole side hustle terminology.
Yep,
right?
agreed. I hate the passive income terminology.
Yeah,
I always say it's a lie.
Passive income, side hustle, be your own
you
boss.
do a lot of work.
All this stuff requires lots of work. It requires interdisciplinary knowledge and learning all the stuff that you never thought you need to learn. Mm-hmm. So and that's the part that people overlook. And for me, I was not naive about it, but I came to realize it when I went from in addition to doing my day job, just trying to write a blog article or do a visual or two, and this stuff takes a lot of time, right? And getting people to sort of see it and read it takes even more time and effort, right? Because suddenly nobody cares about your job title, or the fact that you're doing sort of that interesting stuff in your work, right? So all of that requires a lot of effort, be that investment, be that day trading or forex trading, or be that developing your side project. So the whole notion of I can just do something on the side and it will make money automatically in any field is just untrue, right? So if someone's trying to sell you
100%.
a course on forex, or gardening, or creating an ebook or whatever, or growing your Twitter followers and any crap like that, it just doesn't work like that in real life. So
True.
and whenever something seems better than it is, then probably it's not true. So I'm just trying to look at these things in that way.
Yeah, it's true. Maybe to even add a different angle to it is that, at least for investing, because I've had to look into myself, right? Because what I do is easy for me.
Mm,
And then the people who I know can do it, like Danai, it's also easy for him. But it's easy for me in the way that lifting my arm is easy for me. And I'm sure if somebody either didn't have an arm or didn't know they had an arm, they wouldn't realize that lifting it is easy, right? And if you do have an arm, however, to you it is easy. But if you think about it, it's actually very complex. A good example I can think of is when, I don't remember if it was a video I saw or something I was reading. It's the explanation of how advanced human beings actually are. Like, the most complex computer that we have, as much as you hear people talk about AI in terms of just raw general intelligence, I don't think we have a computer that can match a 2 or a 3-year-old, right? And that's because we don't think of what is involved in a lot of the things that we simply do. Like, you throw a ball and you just see the ball and catch it, right? And once and somebody like, oh, I can't catch, but you can learn very easily. A child can learn to catch, and you can catch, and it's cool. But then when you have to program a computer to catch, you didn't think about the fact that your brain sees that ball, calculates the general movement, the movement of your hand, how to catch it, it is a huge amount of complex stuff. And I thought about that in terms of what I do in terms of investing. And, like, for example, I will read an article. I will read an article on a topic that was half of a mention of somebody's tweet. And it doesn't occur to me that I've read an article just now, right? It was just, oh, let me get some context so I have something around what's being said here, a piece of what's being said here. And I thought it was normal because my entire life it's been normal. That's how that's just what you do, right? You want to know how something goes, you look it up. I blame my parents that you ask them what this word means, and I'd have to go and get the dictionary and go and look it up. They'd never tell me. And so that was just a natural part of learning, that if you want to know how something works, if you want to know something, you have to look it up. And you get used to being in that sort of a situation. And then when you start investing also, especially if you do like what we do, I can see how people might think it looks easy, right? When I am at my most tense, I look very calm. You don't see me ripping my hair. Yeah, you don't see me ripping my hair out. I'm going crazy. When I have millions on the line, I sit there and I'm very calm. I sip my coffee. I'm watching the screen. I'm reading another article. And if you talk to me, I sound the same way. And to you, it might seem, oh, this is mad easy. He's so calm. I am not. I am forcing myself to be calm because inside I am going, oh my God, suppose this. I don't think people get that. Like every single, I am never sure. I have this thing I say that doubt is the hallmark of genius, because when I am absolutely sure, that's when I am, okay, suppose you've gotten it wrong. That's why I'm telling myself that. And then you're looking for every single thing where you could have gotten it wrong. You have your points in mind where if this happens, I jump out immediately because it turns out I was wrong, blah, blah, blah. But it looks from the outside like it's a kind of person. You know that meme of the dog sitting in the burning house and going, this is fine?
Yeah.
That is day trading. That is trading in the short term. That's trading with big money. That's doing anything. That is the life. I can do that at the side of a pool with a laptop, with a smile on my face and music playing in the background. But best believe that in my head, I am running a million and I am looking at everything. I am tense. I'm tense, but Dmytro covered it, and I say it at my girl sessions that you can enjoy Randy's life of posting 40% gains in 3 weeks when he does something like that. If I not try to talk about myself in the third person, that's iffy, that's icky, but I can say you can get to be that person if you are willing to also be the person up at 3 a.m. reading an obscure article that you translated on Google Translate from Stockholm, where it's talking about one half of a point that you need to confirm, and you cannot sleep until you understand it. It's not that I am doing it because I am very, very, driven. Driven, yes, but I am very conscientious, and I'm doing it because I literally cannot sleep until I do.
You try sleep and you're in the bed,
Yeah.
light off, and
I
you say,
love.
"Boy, let's wake up and do that thing." Yeah.
Exactly. You literally cannot sleep until you've done it. Why? Because hey, I did this all before at 2 a.m. and I put in a big order that should go through tomorrow morning. And I went to my bed and I closed my eyes. But before I even go to my bed, I went to brush my teeth. You bathe, you brush your teeth, you get ready for bed, and it's on my mind the entire time. You're talking to you call, yeah, no, great, baby, it's cool. Yeah, no, good night. And you go to bed and it's on my mind. And I close my eyes and I read a little before I go to sleep, and it's on my mind. And I go to sleep. I might even lock my eyes and think I doze off. It's like, I have to know, because everything is riding on this. And unless you're willing to live that, you cannot have the me tweeting about going to Cuba and thanking JetCon for it, that sort of thing. Yeah. And one is indelibly tied to the other, and I don't make any bones about it. I'm very open with that. I'm very open with it at my classes. I'm very open with it. That's what it takes. And if you're not ready to do that, you can't do it. But you don't have to.
Yeah.
Yeah.
And
that's the beauty.
I think you also made a really good point there, where you said, you're not sure, or you feel like you can learn something more and get better, and
always.
there's another piece of information. And for me, it sort of ties back into our earlier conversation about things like developing skills or improving resume. If you think that you already are extremely qualified and your resume is perfect and you've actually done everything and you're the best candidate and whatever, then chances are that you're actually a lot further away from where you need to be, right? Because a lot of really smart and driven people who are achieving career and business success, they're actually people who always think that, well, yeah, but I can do this one more thing and I can learn this one more thing, and maybe I've done this, I don't know, CV or presentation or article or video or whatever it is that you do it, and they go and change it for 50th time, right? Because they just want to make it better. And
every single time,
and invest in a lot of time, and you look at the end result and it seems like it's not that complicated and you can do it. But before you actually try and do something similar, and in any field of life, you don't realize that it's actually not as trivial as it seems. And for me, the biggest test of this, and I think again it sort of relates to investment in a way, is if you had an idea about I don't know, a business opportunity, or what you do in a project, or whatever it is that you're doing, right? If you had that idea 6 months ago, and then you have exactly that same idea 3 months ago, you have exactly that same idea 1 month ago, and today, chances are you're just horribly wrong, right? Because you have done nothing to work on that idea, to iterate it, to make it better. It's the same in business, right? If you started working on something 6 months ago, and you're still at that same point where you believe that everything you believed before is correct, then you're just horribly wrong, right? And
that is
true. And this is where for everyone who still listens without hating on me, if you've written your CV 6 months ago, or 6 days ago, and you've applied to 50 jobs and you haven't heard back, but you still think that your CV is top and you're the best candidate, just, think about it in a different way, right? Or if you went to 5 interviews and nobody called back, it's not because they hired, 5 nephews or sons or sisters, right? Just, I think that point of always trying to improve is actually, something that separates, people who, achieve sort of continuous success with, many failures as well on the way, from people who just don't even go and try, right? And
Yep.
what you do in investment, and this is why I think it's one of the reasons why I like the whole investment and finance topic. It's a lot bigger than just investment or just finance. It's
Yes.
interdisciplinary.
Yes.
It's just life, right?
Yes.
And
Yes.
I think for many other areas it's exactly the same. You don't learn how to write a CV to become a pilot. You learn how to convey your message in a simple form, because that's what CV is. So if you're willing to look hard, then you will apply everything you've learned in one field into 100 other fields if you want to. But you could also choose to look at it from a very narrow angle and just stop trying. But that's not the choice that I recommend, right?
And that's, I'm happy to hear you say it, and you're not Jamaican, because I often wonder. No, I often wonder a lot. No, about what is it about us that causes us to do that? And the people who see it, like when I see it, I don't like to think I'm special. I like to think that anything I can do, anybody else can do, because that's a path that people can follow. But I don't hear this sort of thing from everybody else. I know a lot of other people have it. Big up this guy, Uncle Belly, who I think I did that thread about being a monetary trillionaire. And I had pointed, it's the same usual Forex points, and you didn't get the responses mixed from some people. A lot of people liked it. I like that people got the message. But this guy was one of the people who pointed out, he described his time with Forex in a way that I also see with investment, that it's not really about that thing. You learn it. Like, people wonder, how can you learn to do what I do? A girl can teach you how to start, but what I do is not just based on those day-to-day things.
It's not a codified. It's not, I run through this simple task and then this happens. It don't work
exactly.
like that.
Yeah, I think a lot of people are looking for like a simple one formula, and they're expecting that the one formula with, okay, I'll do this, and if the number is greater than 4, I will know that I should buy, and if it's below 4, then I don't buy or sell. It's good or bad, right? No, you have to have a holistic view of everything. I have to pay so much attention to what's happening in Jamaica, in the region, in the world, just to invest in the way I do on the JSE.
I find it hard thing though. I would find it hard. We've spoken about this, about me going into the teaching thing. Thank God for Shanice. But I would
strikeout.
Yeah, I would find it hard to bring that across, because what you're putting out to people, it's as much as it's a lot of it, it's not all of it, and I find it hard to go. I know what people expect from a class. People expect to be Randy after they've done a grow up.
Yeah, that's crazy. But you know what? Anybody, I mean, they know within 10 minutes, the first 10 minutes of grow, that's not what it's about. But also the end grower with the understanding of what it is about, and how you can, because I want more means. I don't have nobody to talk to, and then I can't always be chewing this guy's ear off. I want more people out there that I can talk to, and they're not just talking to me to hear what I think they should buy. But that point I'm raising from Uncle Belly, and I'll put a link to, big him up.
The Bridget, big up Bell.
The Bridget of yours.
Yeah, man. Othniel Bell. Big up.
What's his name?
Othniel.
Oh wow, that's a rare name. He has a Bible name, actually.
Funny, I know more than one Othniels.
Yeah? Me too. I don't know a lot of them.
Indeed.
yeah, but here is somebody who is saying something that, and I put a tweet in the show notes, but that he said that what I respond. I won't go. I'll put also my thread in the thing, but I was talking about pretty much the stuff you've just heard us say, and his response was 100% facts. I've always said that if I was to ever consider developing, and he has redacted, but I know his Forex as there, because if you know about Forex, you know not to tweet the
Oh
word.
yeah, he
'cause
does.
you get hit.
He does Forex, and from what I've
Yes.
heard, he's done well for himself.
And he speaks like somebody who gets it. He said, if I was ever to consider developing a Forex course, it would probably look a lot like a 4-year degree in economics, geopolitics, and monetary systems, with minors in developmental and market psychology. And the beloved charts would be an elective. And when you hear somebody who does Forex saying that, one, they understand what they're talking about. Two, them charts. I'm not a fan of the shape magic. Yeah, I'm not a fan of those charts at all.
Investments. One of the first things you hear when you go into investments is future performance is not past performance is not indicative of future performance.
Yeah.
In
Exactly.
real life, you know that because this thing performs this way, it's not indicative of the chart.
It
The chart
always
the chart does not affect the future movement of the chart. The chart going up, not going to say, boy, they go continue going up. It's you work like that. Life don't work like that, but yeah.
Exactly.
And
So it's
let me just add one point here, right? It's possible to make money purely based on quantitative strategies, right? There are funds in the U.S. and everyone has heard about Renaissance Capital, who has been doing that consistently. And that book is actually really good. But one thing that people forget is, look.
Well, actually, no, hold on. Two things, because I know people are going. Sorry to cut you there, but I know people are going to ask what book we're talking about.
Yeah. So the book
and the Renaissance Capital story.
Yeah, so I'm just looking at my Goodreads. The book is called "The Man Who Solved the Market" by Gregory Zuckerman, and the book is about a guy who created and ran and still runs an investment fund called Renaissance Capital, which is like the fund that has highest average annual returns in history, but it's not as publicly known as Warren Buffett's or Soros's fund. And they do quantitative trading only, right? So people
you have to introduce it to the people properly, Dmytro. It's so I know a lot of people who listen to this watch Billions. Quants. What's their
Taylor.
name? Don't I?
Taylor.
What's Taylor?
Yeah.
So what Taylor and Taylor Mason does is based off what this guy pretty much did.
Yeah, and look,
Jim Simons.
People in his team, most people in his team have nothing to do with any knowledge about finance, business, whatever. They're mathematicians, statisticians, PhDs in computer science. So yes, you can definitely make money like this, but it's definitely not as easy as just looking at the chart and saying, okay, there's a break over X day average, and this is where I get in or this is where I get out, right?
Yep.
Because it took these guys, I think, several decades to actually crack the model, right? It took them a long time as well to continuously refine it, invest in it, and they've got algorithms crunching all sorts of data, which goes far beyond the average moving of 60, 90, 180 days. So it's kind of similar to me to that point about Forex. Can you make money trading currency? Yes. Can you really compete with 200 PhDs who've been at it for 30 years, and you just sit in your room and you bought a course on Instagram for $99? Well, I mean, if you choose to believe that, then probably try. But my view is I'd rather think that I'm more stupid and not try it than think I'm smart, lose a lot of money, and then realize I'm stupid.
Yep. I don't think a lot of people realize that like a lot of the noise that I started making about the industry came from the fact that I didn't know that I was pretty much beating the industry's returns again and again. And the reason I'm making the noise is not because, hey guys, look at me, I'm so much better in the industry. It's, I should not be beating the experts this easily. You get me? It's not saying I am so great. I'd love to be able to say that if I thought that experts were at that level. You get, but they're not. And I'm saying, hey, this guy who doesn't know what he's doing and is randomly doing it here is not supposed to beat the MBAs or the people who have been doing it for decades at what they're doing. And it's not even because I personally don't think it's because I am exceedingly better than they are. I think it's because local equity has pretty much been ignored for years. So nobody even paid attention to it as an actual space and place in which money should be made. I didn't know that they weren't doing that because I just literally didn't know. And I started doing it, but I don't have anybody in the industry. As a kid, I was just doing it on my own. When I found out that no, I'm beating them handsomely, I'm like, wait, hold on. I shouldn't be. So I started to complain. Well, I found out why first. You don't just start complaining. You find out why. And I realized it's not because I don't know. That was the core of it. I don't know if I am a star or I don't know what a Jamaican star in the equity field should look like. I don't know if I'm one because I don't have a standard measure to go against, because I've seen what the standard measure is, which is the industry, and they're woefully inadequate, and they have not looked on the equity market seriously, with the exception of one or two people, and the one or two people who have done it are pretty much vilified also. But they also have strong results. You mentioned QWI with one. It's my personal view that like John Jackson is heavily vilified in the industry, and John Jackson is also obviously ahead of a lot of the industry, right? And there are other cases that I've said. That's another cool thread that I need to pick up the person who said it, but that question about the forces that move the Jamaican market. And I think maybe we should do an entire episode on that separately. So I won't go too deep into that, but I will say that it was a great thread. And one of the things I had in there was Chris Berry is one of the strongest forces in my view on the market.
Agreed.
Because of the influence that his movement, the things that he has done, and what I assume a lot of times is his moves in the market. I see a lot more from him than I see from the industry. I put the actual analysts and the houses, what they're doing, way down on the chart, off the chart really. Yeah. Not because they're not good, but they just haven't looked at it as an area. And I understand why. Why would I risk 2 billion to make 200 million in the market as a big house when I can just put 2 billion in a bond and make 10%, make 5% easy over 10 years, And it's not my money, it's your money. So I borrow your money, I put it in the bond, I offer you 1.3%. And I put in a bond at 8.7%. We lose maybe 3% of fees, and we eat the difference, and we pay you your 1.2% after we take out our taxes and fees. And if you do that, there's no need for me to run fast if I can go slowly and comfortably and get there. But who was the person talking?
Most people.
Say that again, Dana?
I chalk chalk that up to the level of education of our investing public, or people that come into the market, they just don't know what's out there. So it's easy to sell them that if I cannot demand a different option, I can't get up and say, hey, I want more than that. Because in reality, what else? What are the offerings beyond that? So
yes, exactly. Which is why and that's why I started this heavy push for That's why I started this heavy push for financial literacy, because it's not about knowing which stocks to buy or whatever. It's across the board. There's a load of things. I'll never forget. I think from my second grow, I think my second grow, there was somebody there who I'll never forget. It was a young lady. I don't remember her name, but she was there with a guy. Both of them had come to that girl, and I had explained dividends. I'd explained cap gains, and I had shown what the general dividend return level is in Jamaica over the last few years. And she paused and she asked a question, and I said, what was the question? The question was like, I don't understand. Why would anybody buy anything for dividends then? And she was genuinely confused. And this is somebody who had a little bit of money, and I assume had enough money to invest in whatever she wanted. And she'd always heard that, that, you invest for dividends, because nobody had ever pointed out just a simple point of yield to her. Right. And why would I point out yield to you and real return if what I'm offering is like 4 different flavors of the same low yield, low return thing, right?
Uh-huh.
So when along comes this noisy guy on Twitter, Randy, telling people about how they can actually, there should be more out there for them, and they should be there should be a lot more emphasis placed on picks from the industry and getting picks right and tracking picks and publicly sticking to the picks that you've tracked and saying whether you got it right or wrong and why. Nobody wants that, because then I might get it wrong and I might look bad, right? It has never, that might be a Jamaican thing where nobody wants to get anything wrong, and we're actually, we tie a lot of getting things wrong publicly to shame. So nobody wants to be shamed. And it's funny, what you get then is a lot of people saying, yo, I don't have an issue with being wrong, And I laugh inside every time somebody tells me that, because in my mind, it would never occur to me to say that. In the same way, it would never occur to me to say, I don't have a problem with reaching for a cup and missing it, because it's just part of life.
Yep.
It never occurred to me to talk about it, because I am going to get things wrong. It's part of how I get things right. I get it wrong, right? So it wouldn't occur to me to be shameful. It's a very tricky thing, I've realized. But because we are so ashamed of getting things wrong, and it's such a big fear, we actually we talk about not having an issue getting anything wrong, but the reality is we don't actually do anything that could ever have us publicly have anything wrong, right? So when somebody comes along and goes, hey, how are you recommending XYZ when XYZ is very obviously going to lose people a lot of money in the next 6 months? You go, what are you talking about? Who are you? That don't make any sense. No.
Yep.
Why? And they talk about XYZ great, and I go, yeah, that's great. XYZ is great, but XYZ is also the great company is going to go through a rough time for the next 6 to 8 months. Why would you send people into it? What are you talking about? Blah, 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 blah. And then usually what happens is that month 3 or 4 comes along, it starts to dip, they start to feel it, and then do they then say, well, you're right, this has happened? Or do they then say, well, we'll revise our thing? No. They go, ignore that guy. Ignore that guy. Who is he? He isn't qualified. He doesn't know what he's talking about. And also look at the long term of this. And more people are waking up to the fact that their money deserves a lot more than that. And I am happy to have somebody who is not involved in the long history of that, seeing it and speaking to it, which is what you're doing, Dmytro, because you are used to a market in which the analysts are the lifeblood of it. It is normal for analyst picks to be questioned and followed up on, and we see whether or not we got it right, and there's nothing that comes out of it. Finance is not a nice, smooth XYZ 1 + 1 = 2 field. It is a fractious field. There are people who are, it's money. It's a passionate thing. The same passionate people that Dmytro just mentioned, where they can't finish to get a sentence. So even you guys have heard us on this podcast. You've heard me on this podcast. You've heard Dana on this podcast. And other people too. You've heard so much of it. Those people don't suddenly get in front of a trading screen and, oh, they're nice and we're in church. No, they're just as passionate. And if I'm passionate about something being right and you tell me I'm wrong, I am passionate as hell about it. And then worse, I'm going to say, all right, we'll see in 3 months. And you think 3 months going to come and we can now tell if we're right or wrong, and I mustn't say anything? No, I'm gonna come back and say, yeah, why?
With that same fire return, it's very funny. It's always, when I'm telling you you're wrong, I'm very passionate about it. But then when time come and I was actually wrong. Why behaving like that?
But it's an interesting point, right? And again, I think it's multidisciplinary. And my view on this is, again, it's a mindset thing, right? And unfortunately, the way we were, and myself included, we were brought up by the generation of our parents, and also educated at schools and universities, is good result is do something right straight away, right? Which discourages people from doing things wrongly, right? Because your parents tell you, okay, don't do this, don't do this, don't do that. Then you go to school where the school is like, it's not about going from 30% on the test to 80% on the test over time and showing relative improvements, right? It's about, you either get an A and you're smart, or you get an C and you're stupid, right? So, I think a lot of that mentality of, fear of failure, fear of publicly talking about your mistakes comes from that sort of, upbringing and educational background. And it's more prevalent, again, unfortunately, in, developing countries, because that's just how the whole educational system is geared. And by the way, I mean, in developed markets, it's still not perfect, right? But I think it's shifting there a little bit quicker than it is here, or in other developing economies, where people are sort of being brought up in an environment where you try something, you fail, you change what you've done, you try again, you fail, but it's slightly better, and then gradually it becomes better. And I think again, it's sort of sort of back to this whole growth versus fixed mindset. Yes, that might be true for me, you, some other people, um, but it's what you do with it. You can either choose to say, okay, that's I'll blame my school and my grandma, um, or you can say, okay, that's how I look at certain things in this and this situation, but maybe I should try and do it differently. And again, this is why finance is fascinating, because it's just like life. Um, I'll give you an example from my personal experience. I was brought up, by sort of school and university education in exactly that way. When I started working, I had a huge issue with um, procrastination, because I was just horrified to show someone my work until I thought it's perfect, right? So I would be working on a presentation proposal, and I'll just sit there in front of an empty slide and spend hours until something comes out, and then I'll work day and night until I finish it off, and then someone just says, oh, "Okay, just go and redo the whole thing." So I think we're where this is coming from is in our educational background, and hopefully this thing is changing now, where we're taught that 100% result is perfect outcome with zero iteration, so you should strive to 100% with zero iteration. Whereas in real life, what you need to strive towards is do something to 40, 50, 70, 80%, and just keep iterating it multiple times and get to 150% better and quicker, right? And it's sort of, it relates to what you said about being um, being able to accept mistakes and accept them publicly and learn from them and do something better. uh, it's one and the same thing. It is painful, especially if you're sort of ego driven. It is painful if you have to admit mistakes in public. It is painful if you're being held accountable in front of your shareholders, investors, and whatever. But that's the only way there is to actually get significantly better, right? And the fact that you're saying that people in the market are not necessarily kind of willing to go through that experience just confirms to me that it means that they're not going to get significantly better, and that's not good news for someone who invests their money with professional investors, brokerage firms, whatever, in the funds, because that they will go for like super safe bets that you could have probably done yourself, um, and B, if they get something wrong, you never get a correction, of course, because they're just not willing to accept their mistake and change the approach. So it's a very interesting concept for anyone who either invests or does something in career or business. I would say like the best way to learn is just try, change, try again, change again, try again, change again, and it's a never-ending circle. There never should be a point where you arrive, right? Because when you think you arrive, then that means you're far off.
Well, yeah, I can't disagree with you.
I can't at all.
Yeah, no host has ever gotten anything wrong. I can assure you that, especially when they've gotten things wrong, is you're not going to hear them admit it, and they get angry at the people who point it out.
And look,
Mostly
it's
people
it's
like
you
me.
know it's sort of the issue of every developing financial market and lack of very well developed competition, right? Because
Mhm,
star investors in the UK get crushed all the time, right? There are star investors
mhm.
who've ran successful funds, and then they go out on their own, and then suddenly people are pulling out hundreds of millions of pounds out of their funds because you know the industry is run transparently. There is loads of competition. You can just get your money out and invest somewhere else. So
Yes.
there is no choice other than accepting accountability and responsibility and owning up to stuff you've done well and not so well, right? Because you will get punished whether you want to admit it or not, right? Clients will vote by pulling their money out. Whereas
Yeah.
if you're in a market that is less developed and there is less competition, then as a brokerage house or an investment house, you're in a slightly more privileged position because you know that you know there aren't that many other firms. You all are recommending exactly the same thing, right? So pulling from one and putting money
Yeah.
into the
We're
other
all friends.
is
We're
not
all
is not
friends.
going to
Yeah.
help. Then the process itself is prohibitive, right? Because it probably takes several weeks to go from pulling money out to putting money somewhere else. You probably get slapped by some fees that you never knew about before. So
Yeah.
but it's one thing that everyone working in the industry, I'm sure, realizes that's not going to last forever, right? It ultimately gets.
I don't know if they recognize that the responses have been going down a very for the last maybe year have been going on a very predictable path,
Mm,
at least as far as I expected, which is let's group up, let's batten down the hatches, right? Let's ignore the world. And I don't think that they realize that the real push, at least what I know I wanted, was not because if you fix that, the Gang of 12, I don't have more money than them. I don't have more access. I can't do the stuff they do.
mm,
But what I can do, which I think I'd like to think I've done, is I've worked on financial literacy, which is you see the point you made of how in the London market traders, either hotshot traders will leave and go out on their own, and if they're good people will flock to them, and if they're bad
mm,
the people know because people pull their money.
yeah.
It's open, right? um the reason why people are able to do that, not just the transparency, but also because the public themselves, they have some amount of financial literacy.
Mm,
Yeah, for the most part, the majority of Jamaicans who would have put their money in anything, a lot of them have no idea what the hell is happening. They just take it for granted that there's money there, which is why for years we've managed to get to things like they will tell you how much money you have made in interest over the last 10 years. They won't tell you the percentage,
mm,
right? Because 2.2% sounds very great. It doesn't sound very good, but 2.2 million
yeah.
again sounds great, right? And you're like, yo, I put my money in there, I put 10 million in, and it's 2.2 million, and it sounds so good. I'm like, you pause, you stop a person, I've done it
You
maybe
do.
over 100, 200 times now to see it. When you bring a person, you say, stop, let me get this straight. You put mommy's money in there in 2001, and
Yeah.
it's 2020 now, and you now have 2.2 million, but you put 10 million in there almost 10 years ago.
Yeah.
So in 10 years, you've made 10%.
Yeah, and
And then they go, you
adjusted
see them
for
start
inflation,
realizing,
and there was you
yeah, you
actually
see them start
lost
realizing, they
money,
go,
right?
yeah, is that bad? And you go, well, it depends. You have to compare it to something else.
Yeah.
All right. And then what has happened now, though, with a lot of the JSE ads going out, is that people have heard the JSE say how much they've grown and the market has grown, right? So if within that 10-year period, a lot of growth happened, why didn't I experience a lot of that growth? Why am I
Mm,
down now? And people are waking up to that fact. No, you're right in that if a lot of people wake up, it can't continue. But I don't know that we can't stop people from waking up in Jamaica, because you also have to understand it's linked. I like how you keep linking both the personal responsibility point and investing point. It is linked to that. Waking up to your investments doing well is a matter of personal responsibility. It doesn't mean you're going to be in front of the computer being a pretend Warren Buffett or a day trader, but it might be as simple as the money that you have in the bank, or you have in a thing for the last 5 years. Go and check how much it's actually made you, and compare it to how much you put in. Yeah, if it's more than 2 years and you have made less than, depending on what the instrument is, if it's more than 2 years and you've made less than, I would say maybe less than, if you've made less than 10%, you might want to look at your options. Because it might just mean that maybe you're in a low and slow product, right? It could be in a small, safe bond, and maybe you are open to a higher risk profile, that sort of thing. But just don't just assume that because the person had on a suit and they shook your hand and they said they know finance stuff, mean that they actually know finance stuff, right? It is across the board. There are lots of people who don't do it. And then nobody wants to think about that. Nobody wants to think about the personal responsibility of, okay, then I'm going to have to go and look it up. I don't know anything about numbers. I don't know anything about finance. And you're scared. Just feel the fear. Don't let it kill you, but don't let it stop you either. But I don't know that in Jamaica that can't be stopped, because I hope it can be stopped. I think maybe now is the first time ever that it's hard to stop because of social media, right? Like I don't have any sponsors, actually. I don't have any host working with me. I'm all on my own. I'm just a regular guy talking. But what I put out there is out there, right? And maybe that I know for a fact that has inspired hundreds of people, and they have started to look at things, and the industry has changed as that has happened. But I don't know if you know how powerful this industry is, because, for example, you can't even say that there's no competition in the industry. There's loads of competition. There's more than 10 direct competitors just in the equity space. And somehow they all managed to settle at a 2% fee for years. All of them just happened to settle there. And then now when competition started and people like that yap around Twitter, started to push things and highlight when somebody drops their fees. No, we're caught. A couple of people have dropped their fees. It's just changing slowly, but I don't know that it can't be stopped, because Jamaica is a funny place.
I think it can, and actually that fees point is a very good example, right? Because 2 years ago, when I came here, the fees were at 2%, right? Whereas now they're at 0.5, and 2 years is a short horizon. I know they've been at 2% for a lot longer, right? But
long.
But still, I think things can change. But yeah, I totally agree with the points you made on financial literacy, because there clearly is a link between growing financial literacy, growing competition, growing product offering, and it's linked to other things as well, right? Higher GDP per capita is linked to higher education levels, higher financial literacy. Like these things don't exist in vacuum, right? You cannot just go and make everyone financially literate without making them, let's say, more educated or more productive at the same time, and vice versa, right? So, and that's actually a good thing, I think, and it's a good opportunity, because by by doing certain things and education, you're automatically sort of improving people's understanding and opportunities and chances they get in a number of other areas, right? So I think for someone who's either interested in investing or career development or whatever, a good news is that by developing in one field, you will be able to connect the dots better and quicker in other places as well, right? So again, I think that's something I would take away from this conversation is to me it's never about okay, how do I write a better resume, right? Or how do I,
Mm-hmm.
find a stock that will outperform tomorrow? It's more about, you start learning in one place, and the deeper you go, the more connections with other related and non-related areas you will see, and it just makes you a overall better rounded person. So
Yeah,
that's how I choose to look at it.
I I think so. And you touched on the point there. It's not ever about just knowing what the thing is for tomorrow, or what the hot stock is, or the hot pick, which I'm sure we get asked all the time, but I'm going to share some of that with you because when we did have you here the last time, we did have you run the earnings season gauntlet.
Ah, yes.
You did do a lot of picks, and he's far. So one silver lining to the episode being lost is that Dmytro, you avoid the COVID dip.
Oh no, but
So
I remember what I said, and look, in the interest of transparency, and I talked about owning up to mistakes. I'm pretty sure I remember I said I talked about, I think I talked about um, lab and mailpack, but I also talked about
oh,
QWI in a big way, right? So I was
uh-huh.
I was big on saying that QWI
Yeah,
is the best thing. And
yeah,
I didn't get it right, and I'm happy to. I'm not happy to admit it, but I'm admitted it, right? So it didn't perform anywhere near to what I said it would, right? And
yeah.
that's just the fact. I didn't get it right. I thought it was undervalued at that point when we spoke. That was right before COVID. And another thing, because I remember we touched on COVID as well, and back then, which was end of February. I think what I said is like, oh, this thing is just somewhere in China. Who cares? Or something along those lines, right? And look, and I'm okay to repeat it now, right? I was wrong. I was horribly wrong, right? You know, Many other
Yeah, but let's
people,
not.
yeah,
I don't want you to kill yourself and say, oh, you're wrong. I mean, we were also pretty strong on QWI on this podcast. I don't know that we aren't still, because COVID was a factor that
Yep.
hit them. In
Definitely.
fact, I didn't even want to say COVID hit them. I think for QWI, they made that decision that
For
I
the
can't
access.
really understand. Yeah, to buy that heavy amount of access. It was, in my view, a bad.
mm,
It was obviously bad then, and it continues to be bad. It's like
mm.
an albatross around their neck for the last few quarters, and that wasn't a factor at the time. You wouldn't have known. I don't even think that had come out as yet.
No, I don't think so.
You know,
No.
yeah, so it's not that. So it's not about not getting it wrong, which was always said before. Because I mean, I also would have gotten it wrong then, but my timeline generally would have been pretty far, and things change. But it's about why. The why is important, right?
Yeah, I mean, the why is important, but also, what's important as well, and that was, the learning with COVID for me is that, we've all read Black Swans by Nassim Taleb, but
Mm-hmm.
the fact that I read the book didn't make me think that there will be something like that happening in 2020, right? So, that's
Yeah.
another thing that I think is important to consider. Um, there will be things that you will not get right, and things that have nothing to
Mm-hmm.
do with your specific stock pick, or with your logic. It's
Yes.
just an external event that affects so many other things, um,
Mm-hmm.
and these things will just happen. So rather than try and use the benefit of the hindsight and justify it in one or another way, I think it's a reminder for me personally, and for all of us, that there are things that are just outside of our control, and we cannot necessarily predict for them, and we just have to accept
Yeah. And react to them.
and react to
I
them. Yeah,
mean,
exactly,
Yep.
yeah,
and react to
yeah.
them, because these things, and you've, I mean, I'm sure you've done your portfolio rebalance, and I've done mine. I got most of the things okay. I think some I didn't.
Yeah.
Um, but
Well, I mean, you had a strong set you just mentioned. I wasn't even going to hold you to it. I was going to allow you to just pick a new set and it'd be post COVID. But you're right. You got Lab, you got Mailpack. I mean, Lab is up cap gains. What is Lab at today? Lab at this point would be is at $2.60. So
Mm.
we're almost coming on to the 1 year mark between when Lab listed and now. Up 160% pure profit. Eh, great. Plus you'd already gotten a dividend. Pretty great. And they just continue to perform. That's a strong stock, right? For that time period that you picked. So I mean, we didn't go into what levels of money you would put in each. We just look at it dispassionately. That was a
Mm.
great pick. Second behind it is Mailpack. You up 91% in 6 months with another with an even stronger dividend
Well,
hitting that one.
I'm not, because my average price of Mailpack at which I bought is not the
Mm-hmm.
IPO price. It's more like 145 because I've been buying since. But yeah, it's okay. And on QWI, obviously I'm in red by, I don't know, 20% or something like that.
I think for
But
QWI you'd be down, yeah, quite a bit because at 73 cents.
no, but yeah, but
Oh, your
my
average would be
average, yeah,
lower.
my average is 92 or something cents, right? About 90 cents.
Oh,
So
that's good.
I mean, it's still not like put 90 there. I don't remember. Yeah.
Okay.
Well,
So
I mean,
that
whatever,
would
right?
be
I mean,
down like
it's
maybe
15%.
15%.
Yeah. I think, yeah,
Mm-hmm.
like 15, 16%. But, I'm not claiming that I will be able to get it right all the time. And by the way, talking about volume, I've got more money in QWI than I have both in Lab and Mailback combined. So, to sort of, stroke my ego, I can say, oh, okay, I've made X% on Lab, X% on Mailback, but I've lost in
Mm-hmm.
absolute terms, or in unrealized losses, more on QWI. And
Mm-hmm.
it's just, again, for me, it's a good learning, and the whole crisis is as well that first of all, you're not going to get everything right in the normal circumstances. Second, in extraordinary circumstances, you will, get more things wrong, but, there are things you can do to rectify it, at least to an extent. But, and also, I think another one for me is like, even in the presence of external events, if some of your beliefs may still be correct, even if, at this certain point in time, you're down, right? And, I think I still believe that's the case for QWI. You mentioned X is there, but they hold a much sort of wider portfolio of stocks, including in the U.S. I mean, the U.S. part is helping them right now, of course. So I still believe that it's a good investment opportunity as a stock. And let's see what happens next time we talk here.
Yeah, well, let's see. Well, I mean, you can pick. Nobody knew that, but I like that you came openly with it. But what I wanted you to do it in light of to say no is in light of the everything that's happened. I mean, what do you like in the market and why? You haven't
Look,
done one of those in a long time,
look,
man.
I would say, there are still stocks that, went down significantly, but are fundamentally strong. And, some of the banking picks, right, on the main index, I would still go for them, especially now, right? So, I haven't actually like looked at it in super detail, so I'm not going to have the latest
Mhm.
up to date information for you. But I'd say, your GMB, your
Mhm.
proven, these
Mhm.
types of stocks, I would still put money into them today. And
Mhm.
then when it comes to junior market, I'd say, I'd still at the levels that are currently there, I'd still invest in Lab, I'd still invest in Mailback. I'd look at companies that are, undervalued, on sort of comparables basis,
Mhm.
relative to
PE.
the, yeah, I mean, PE is one, right, relative to the overall market, but
Mhm.
having above average growth opportunities, and above average sort of, how would I call it properly, like market, or overall sort of economy benefits from COVID, right? And like Mailpack is a good example. I know you guys talk about Mailpack a lot, so I'm not just going to repeat it. But it's a good example. If you think about it, you have a company that's traded significantly below the average price to earnings of the junior market. Yet that's the company that actually grows their earnings to a higher extent than the rest of the junior market. And at the same time, that is the company that actually is one of the few who benefit. I'm not talking stock now, I'm talking about business itself, right? Who will benefit or who already benefit from the fact that people order more delivery, stay more at home, and so on. So if you put those several things together, then you need to do some more detailed analysis, of course, but it doesn't sound like the worst idea in the world for me. Same goes for lab, right? If you think about a company which actually does stuff that again, I'm talking business level rather than stock, right? Does stuff that actually gets more demand in a situation like we're in versus other businesses. It's the company that has a strong balance sheet and enough cash. It's a company that also, and again, I haven't looked in detail on the financials, but just looking at it from the business perspective, right? It's the company that I assume without looking has, in terms of their cost structure, has higher percentage of variable cost versus fixed cost, right? Because most of their cost is people. If you're a business like that, then you can adjust your cost base according to demand and market situation. You can choose to employ 50% less people starting tomorrow if you so wish, right? So you're much better positioned to kind of adjust to peaks and troughs of demand. So when you put that together with strong balance sheet, cash position, being in the
Heavy
industry,
cash position.
being in the industry that benefits from the crisis, and also I don't remember exactly, but I think they're, if not below average sort of PE ratio to junior market, they are probably the average, even though in terms of earnings growth.
I think they're way below.
Yeah.
I mean, the lab has a PE today at $2.60. The lab has a PE ratio of 16.
Yeah, which is
17
which is the average market is what, 24, 25, right?
Yeah.
Overall market today, I think, is above 30 times.
Junior.
Believe it or not. Or no, not junior.
Yeah,
not junior.
I'm thinking junior. Junior, I've seen somewhere like 24, 25. I'm not sure it's the latest, but I mean, in any case, I mean, the point stands, right? They're significantly below that. So if you put all those things together, you're probably not wrong, at least in half of them, right? So yeah, that's
24
my
times.
take.
Yeah, the junior market as of today is at 24.1 times, and the lab at 16 times is obviously well below, and the lab continues to outperform. So I mean, you took two, I think, great picks, easy picks.
But I'll say this again, and maybe next time we talk, I'm still wrong. I still believe QWI is a good pick at its current price. I don't remember. I haven't checked lately what the net asset value is as of now, but I believe it's probably still at least 20% or probably even more undervalued. The last I've seen was about $1, so it's more than 20. Yeah. So no, this is old, right? So this. Oh no, it's 3rd of July. Yeah. So
no, it's pretty good. So up to the 3rd of July, the net asset value was $1.03.
So I still believe that that fundamentally it's a good pick, and maybe I'll be wrong again, but that's fine. I'm still thinking that.
I don't personally think you're wrong. I mean, as I would say, I always pressure deny it, but we haven't done this in a long time. I'll pressure myself. QWI is also one of the stocks that I expect to do well maybe over the next, but again, it's a long timeline, right? Because of the nature of the asset. Maybe the next year. I don't want to give anybody my thoughts on anything much lower than that. I will say that I do expect them to have good results. They haven't had a run of good results recently, but I do expect them to have good results soon. And with a net asset value of $1.03 and an actual share price of 70 something cents, yeah, I mean, the story pretty much writes itself.
Yep.
That if not that the story does not write itself, because net asset value will not mean that share price has to go there. However,
Yeah.
I will say that I do expect them to possibly be pretty well, do pretty well. What else would I like these days? I mean, we mentioned at the top the indies, that indies as a company is strong, and indies as a company is not only strong, but the share price is for some reason cheap right now before a great dividend, and a dividend is guaranteed money. So I mean, we said openly, and I stand by that, I'm going to be buying more. I've bought and I'll be buying a lot more. I like indies in the near term. I do also like, I mean, not what I like, but what I'm excited about. You know, I've given two. I'm going to shut up here. I don't want to go any. Yeah, I don't want to go any further.
Okay.
I'll keep quiet on that one. Then you want to drop any, or you're good with it like that?
Probably good, but I'm looking through. Maybe it's something I want to speak on.
Yeah, that's the issue these days. It has gotten a lot. The responsibility of our voices has started to weigh heavily, because we do get these things pretty right, and I think enough people are starting to realize that that's money that we're giving away for free.
All right. So something I won't necessarily give a pick per se, but there's something I found very interesting. CPFV. You've heard me speak on it before. PPFVs. Yeah, we've spoken on it before. We've spoken about the thing there. But other day in our little group there, I asked, give me some picks, that some off the side of the road picks that you're not really hearing about. And I think it's Marvin Gordon, big up Mr. Roshad or something his name is on Twitter.
Mr. Showshad, I think. I think that's his Twitter. That is his Twitter handle. I'll find it and put it in the show notes. But yeah, I know who you're talking.
Yeah, man. He put forward CPFV, and it's in line with our reasonings for why we like it. The profits come in, and despite everybody was saying, boy, them doing the buybacks. And if you look at it, the buybacks have been beneficial to shareholders. You saw where the stock price itself falls into a rut. So it falls into around $30. So, and then they come in with a buyback, and then you see that spurs the stock on forward. And if you really look at it, you can see where there's an opportunity there. If you're at a comfortable low where it's below the thing there, it's below the NAV of the company, then and they've been buying properties. They're investing in new properties. They are getting income from their properties, and so you can see where now income is coming in. If there's a buyback program in place, because the usual, so I know already. For some people can speak on it. David and Stuart, they clarified what is actually happening with the thing there with the shares. So it's easily checkable in the audited. They do speak on the fact that they cancel the shares. So that means that it's not that the shares are being held for resale. So the outstanding shares of the company are actually decreasing when they do buybacks. Which means that when the buybacks happen, if I'm a holder of a company, then I own a larger percentage of the company today than I did before the buybacks. Which means I have a higher profit allocation and dividend allocation. Yes, it does take some of the company's money to buy back the shares, but if you really look at it, how much of the company is actually being bought up, and if you're looking for future
and if
value,
they buy it below its nominal value, which is a major thing also.
So you're actually getting a deal on the price of the shares. So maybe you can participate in the buyback when they are buying back, or even just hold the stock so you can look and say, boy, maybe if the dividends are better, how much of profit's worth to me, and the thing go more profit allocate, more profits more better EPS is very likely to result in a capital gains growth. It's not something that still people
in time.
So it's not a company that still people talk about, but it's a company I like just looking at it. It's a good company. So those are the words on that one. a big up I want to give because recently, remember our episode where we spoke about PE and mathematically I look at the PE function and I said it's really how long I invest in, how long till the company pays back in profit my initial investment. So I buy the company at 40 and it's a PE of 20, then it would take 2 years or something like that. No, yeah.
What are you?
No,
What do you mean? How you sound like you're talking
yeah,
about?
you're right. It would take 20 years. I buy the company. It doesn't matter the price I buy the company. So the PE of the company, so the PE is 20.
Mhm.
It will take 20 years for the 20 years for the company to pay back in profit. So you take 20 years of that same profit, whatever you make at 20, to give me back my initial investment, right?
Return on capital invest.
Yeah. So
Technically, you're a capital investor.
so I buy the company at X
Yeah.
and the company is worth a PE of 20, then if it will take 20 years of
A
that same
return,
profit level
ROE.
to finally give me back for you to pay me back my initial investment, right? Resworth Merchants, I heard I just reached that conclusion by looking at it. I think every application of PE would stem from that. It just makes sense to me, right? So
I think we could do an entire PE episode
Oh,
because
definitely.
how you described it is not how I would look at it. Not that you're wrong, it's not how I approach it. That's such a good point.
I'll think we don't.
Sorry.
But I can see where every single application of PE, using it comparatively, using it as a standalone, just to look at a company and say, would I buy this? Just look at any company. You get a company, look at it and say, but would I buy that? It would take me 20 years to get more money if I make the same profit every year. Then it does make sense. If I'm looking for if I have a 20-year outlook, then yes, buy the company, right? Stuff like that. But yeah, I reached that independently by looking at it. But I heard apparently I've never heard somebody else speak on it in that way. It always, how much I would pay for the profits of a company. Something it always sounds so obscure, and then the application on it is always one dimensional. Boy, compare it to its comparables in the market. I don't fully subscribe to all of that, but if you think there, Resworth Merchants, the CEO of VMwell,
I think
there was a forum.
Is that what he is now, or is he like the VM group?
VMwell,
I don't even remember.
VMwell. He's VMwell. He's the CEO of VMwell. But he at a forum they had the other day, he mentioned he explained PE in that way. So I've never heard it explained that way. So I figured Marie, I always talk about him. He's a person that is practical about his investing and he speaks practically about other things, and you can see the results. Just open VM's numbers. In the time that
there's at least one of them. There's at least one of them in almost every house, I've realized. One or two really, really sharp people who
he invests. He invests successfully. You can check whatever you want. He actually invests.
Invests. Yes, that is true.
He's an avid investor. So big up Rez. He reached something that I reached independently. So just chip on my shoulder in a way.
I mean, congrats, I know the feeling, but I feel compelled to remind you that that's confirmation bias.
Yeah, man. But
thank you for causing us to hit each other with that all the time now, Dmytro.
To be honest, it's right. It's fully correct. So it's not a matter of opinion. It's literal fact. If you look at the formula for PE, that's exactly what it's saying. So big up Rez, somebody to rate that level, that can explain it in that way sensibly, then big up every time. But
and at the level he is and the post he's in, he's going to get less, obviously probably no pushback.
Oh yeah, man.
That sort of yeah. No, you're making me think about your explanation of it. That's definitely fodder for another episode. I'm thinking, how did I naturally describe it as the return on each dollar that you pay based on the last 12 months income, profit, net income, which is how I think. But then I actually think about what that means in terms of net income, because the reality is, although it's profit, I'm not actually getting it. They're not paying it out to me, they pay out a piece of 1 quarter maybe. So it is a great way to think of it though. And if you're at the scale that would Resworth and company would be working at, where they can make big multi-million-dollar decisions and grab huge chunks of companies, then I'm sure it's even realer for him. Yeah, that's a good big up. That's a good point, and a good pick for yourself for post Corona pick. Oh gosh, well, we've been talking for a long time,
Quite a
Dmytro. I
while.
don't want to keep you any longer, and we have had people here a good little while. It look like almost 3 hours. So I'm going to call time on this one, and we'd say thank you to you, Dmytro.
Thank you, Dmytro, for another good episode.
Thank you for another good one. And
No, thank you guys for having me. It's always
Randy, you
good
made
to
me call
talk
his
to
name
you.
wrong. Dmytro.
Dmytro, am I not pronouncing it correctly?
He keeps
That's
saying Dmytro,
fine.
sir.
That's okay. You're pronouncing it fine.
Okay, cool.
Oh God, he's been in Jamaica long enough for everybody to butcher it.
No. You do the big ups. I'll do big up for Starbucks Ligune because all the guys there learn how to spell it. So,
all right.
Yeah.
That's a big one. So big up Starbucks Ligani. And I
haven't
hope
been in a while.
I've never been actually.
Oh, really?
Yeah. That's a good big up. Anything else you want to throw at the people, Dmytro?
No, that's
Before
it.
you tell
Look,
them
I mean, it's great to talk to you guys as always, and always interesting to hear your thoughts. So thank you for that.
All right, sir.
Thank you.
Bless up. Thanks for coming.
Thank you very much, sir. It's always good to have, especially an external view. People you will likely hear more from Dmytro from us, as long as he'll take my calls. He'll probably be back on another episode because I like having an external view to the market, and he has it. I myself, you guys have heard enough from me. So I'm Randy. I'm at RTRO on Twitter.
And I'm Daniel, H-Daniel on Twitter.
And this has been earnings season. Hope you guys enjoyed it.
Guys,
We'll
big
for
up.
another one soon. Bye, guys.
Earnings season.